Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Welcome everyone. Good morning. Thank you everyone for joining Stock Sniper Trading. My name is Ron and my partner is Dave, and it is just after 7 a.m. Eastern and it is hump day. It is midweek Wednesday and May 21st. So thank you guys for joining. I appreciate your guys' time, and I hope that the markets cooperate this morning and can bless us with some beautiful pips this morning. But as always, we do need to trade with proper risk management. So I hope you guys are adhering to your plans. You guys are getting disciplined. You guys are cutting your losses, getting rid of them, and you got a plan for your profitable trades. So the plan for today is what we've been doing every single day this week. We'll go over gold, we will go over NASDAQ, and finally we save the best for last. We'll keep US 30 just after 9 a.m. So when we get into Wall Street, okay? We'll go over all the news. Target has had earnings this morning. We'll talk all about that. Not the greatest, but we'll go through all of that. So I hope everyone's having a great day. Let's get things started. Everyone in the chat, where's everybody from? Just to get some engagement going on in here. I'll start it off. SST is from London, Ontario, Canada, the Forex capital of the world. We're the real London, guys, not London, England. London, Ontario is where it's at. Welcome. Johnny Four Eyes, UK. Vabav, India, welcome. Christoph, Athens, Tikanis, welcome. Thank you for joining. Okay, guys, so let's get started with Forex Factory and just go over the news. Okay, so Trump spoke in the power hour near the end of the day yesterday with Defense Minister Hegseth, and Trump was talking about a U.S. Iron Dome. That's his project. That's fantastic. Okay, and so that's what he was talking about yesterday. So it didn't have too much to do with the markets and things like that. But Trump's plan is to have an Iron Dome done in a few years. Okay, and today we've got, okay, so in the UK, pre-London over here, you had the British CPI year over year. It's increased from 2.6 was the previous year. They forecasted an increase to 3.3, which is a large increase. And look at the actual number that came out, 3.5. So CPI is year over year is up. So we'll see how that affects the pound, and UK had some news over here. And then moving into right here, day 2 of the all-day meetings at the G7 meetings over here. So the top 7 nations in the world have meetings all week, specifically about everything that's going on around the world. Lots going on around the world, mind you. So it's hard to keep up with all the day-to-day news. It's overwhelming, actually, to try and keep up with all of this stuff. So just try, if you can, to keep up with the big news in the markets and things like that. Because it is overwhelming to keep up with all of this stuff on a daily basis. Like, we have lives outside of trading, you know, and just to sit there and read up on all this news, it's too much. So just keep with the big news, especially for the securities you're trading, right? Like, here's one for crude oil. So at 10:30 a.m. Eastern, US is going to release their crude oil inventories, and anytime there's anything to do with OPEC, with crude oil, if you're a crude oil trader, those are what you should be concentrating on news-wise. So this does affect all the supply and demand, and so this is really important stuff, the crude oil inventories. We've got a few members from the FOMC speaking today, Barkin and Bowman. We had a lot of members speaking throughout the day yesterday. Again, in my opinion, Powell is the chair. He's the the one that the markets really move. When he talks, these guys are important too, but not as important as Powell, okay? And you can see that they're low impact folders. And that's basically what we have all day today, okay? And then there's after hours in leading into the future session, you got some in the Tokyo Asian session, the Sydney Australia, there's a little bit of news there, okay? Just so continuing and into earnings. So as I mentioned, we had Target report this morning. Let's just update it for the revenues. So they reported at 6:30 right prior to our call. Look at this. Earnings per share, $1.65 was the estimate. What was their report? $1.30, 35 cents short of their estimate. Not good. Revenue was a disappointment. That was below estimates. And growth, negative. Surprise, really negative. And the guidance, I don't know if they're still in the conference call right now. If the guidance there, probably the guidance is not good. So we'll talk a little bit about that. Like right now on Target, what I'm just looking at right now, Target badly misses on earnings, slashes guidance as it battles DEI backlash. Target cuts annual forecasts as tariff pressures mount. Demand slows further. So that's kind of what is coming out of earnings. And again, if you don't know what Target is, it's kind of like a Walmart store where a lot of retail traders do their daily, weekly shopping in there. So if we're starting to see these type of reactions at Targets, at Walmarts, then that tells us exactly how kind of the local economy is doing, consumer spending. Walmart had earnings yesterday, and they said that the tariffs are not really affecting them currently, but there won't be a lot of things on the shelves that there normally is. So that was coming out of Home Depot, but Home Depot is a little different than Target and Walmart. Home Depot is more construction, building, to your home projects, renovations, and things like that. And Target is more, they do get a lot of things from China, and we have that ongoing tariff war going on over there. Okay, so the rest this morning, Lowe's, that's like another Home Depot over here. That's what we have going on here. And then in the after hours today, okay, Snowflake, so it's more of a tech AI company. Zoom, this is what, welcome everyone on our Zoom call. So Zoom has a report today. I don't see anything big that can really impact the markets, except for maybe Snowflake in the tech AI over here, okay? And then just right over here, our Yahoo Finance news, how Trump could push companies to eat tariff price hikes. So he's the one making these unnecessary tariffs. Like it's not a natural phenomenon. It's not like the earthquake or something like that naturally happens and affects supply chains and things like that. He brought this onto the global markets, and now he's saying that all these companies should eat these tariffs. It's basically like he's saying all of us as consumers, we should pay these extra prices, we should eat them, which is complete bullshit in my opinion. He created this, he can eat these fucking tariffs. But don't get me started with this, okay, guys? It's too early in the morning. Okay, so Mr. Donnie Trump is telling companies and us consumers to eat these tariffs. We pay for these. The companies don't pay for these tariffs. We pay for them when we go to Target. So this guy's a clown. If you believe his bullshit, the guy lies. Every other word out of his mouth is a lie, and he exaggerates, and he hasn't done anything that he said he was going to do, except for securing the border. We'll give him that. But look at what they're doing. They're getting rid of due process in the U.S. They're just kicking people out who are naturalized U.S. citizens. Like that could happen to anybody, anywhere. Like that's not right. But that's what United States voted for right there. I live in Canada, okay? So we have our own issues over here. So, but it is what it is with this guy. You love him or you hate him. I don't care about that, but he's not honest over here. But what politician is honest? Let's be honest here. They're all full of shit. But these guys control us, right? So, but you don't have to necessarily agree with them. U.S. stock futures sink as U.S.-China chip feud reignites. What's next for Tesla as Musk enters a new phase? We'll see what this guy's doing. What else we got going on? Okay, so U.S.-China tensions over chips put trade truce at risk. Bond market jitters are back. Okay, so the 30-year is back over 5%. So that's not really good, because what it's telling us is the 30-year bonds has always been a safe place to place your money and get good interest, but now the interest is increasing because consumers can go elsewhere. Like, they don't need to invest in U.S. Treasury bonds because you can find bigger returns in gold. Like, go park your money in gold, buy gold, buy. Some people are buying Bitcoin, and it's giving a much bigger return than the 30 years. So those rates are going up. We had lows. What else we got? Let's see here. Target cuts annual forecast as tariff pressure mounts. Demand slows further. That's what I was just reading there. Target sales fall sharply in the first quarter, and the retailer warns they will slip for all, not just like a quarter, but sales will slip for all of 2025. Okay, so sometimes companies just go quarter. Everything is like on the 3-month annual forecast, and they're saying sales will slip for all of 2025. Okay, we're in May, so that's not good. What else do we got going on here? So that's what we got going on in the pre-markets right here. S&P, you can see the S&P, Dow, and NASDAQ are down roughly -1% right now, and gold is up 1%. Okay, and VIX is up 4%. This is our volatility index, so there is some volatility in the markets. And then let's take a look at guys on YouTube. There's a free Telegram channel pinned at the top of the channel. So we had a sniper in our group was asking us about backtesting and trading. So kind of just did a quick little blog on what is backtesting and why it is important in trading. So if you guys want to learn a little bit more about backtesting, the blog is right here. Couple trades yesterday on gold, and here is the YouTube link right here for everybody. And this is a free Telegram channel showcasing what we do at SST, promotions and things like that. This was that other blog we did on Moody's. Where to find these blogs? If you come to our website right over here, stocksnipertrading.com, you come to more and blog, and this is where you'll see all of the blogs. So there's the backtesting one, there's the Moody's downgrade. This was a trade recap of US oil, weekly market outlooks for members over here, and just continuing Friday. We're going to head into a Friday very soon. How do you want to master your Friday trading heading into the weekend? We talked about that last week. Are you going to be doing any overnight holds over the weekend and things like that? Okay, so lots of good information here, good education, and it's free. Utilize it, guys. Okay, so now I know why you guys are here. You're not here to listen to me talk about Target. You guys are here to hopefully look at the price action candlesticks. We're going to start with gold. I know gold is looking a little choppy right now. NASDAQ was pushing down but found a bottom so far and pushing up on the 5 minutes. And US 30 took a bigger dump. United Health is down, I believe, 6% in the pre-market. So maybe caused that little push down. And we'll see what else is going on. Okay, so welcome everyone on Zoom. Thank you guys for joining. Conrad, Vabav, welcome. Tim, Christoph, Mike, thank you for joining. Reese, welcome. Good morning. Nigel, good morning. Johnny Four Eyes, Tim, welcome. Thank you guys. Mark MSG, thank you for joining. I appreciate you. Welcome, guys. Mark, will yesterday's live 1 minute trading session be? It is uploaded. It's on the site. It's under like where we have the live trading with Coach Ron and Coach Dave, and it's under there. Welcome, James, Midlands, England. Welcome, Samuel. Good morning. Thank you, guys. Okay, guys. So welcome, guys. And everyone on YouTube, thank you guys as well for joining. Tony, welcome. Good morning. TraderBit, welcome. Thank you for joining. Hit the like. Don't let Ron have to ask you guys. Thank you guys. If you guys can hit the likes, we do appreciate it. Sergeant KLR, thank you. I appreciate you, brother. Welcome. Meeks, thank you for joining. Michelle, welcome all the way from Namibia. Welcome, thank you. TraderBit, Jamaica, I love it there. It's like my home away from home. I'll be coming there very, very soon. I love Jamaica. Welcome, Eli. Thank you for joining from New Jersey. Tony Gold, you're taking a little bit of a break. Thank you. I appreciate you too. It's good to take a break. Clear your head. I understand how it is. Every trader, everybody needs a break away from the charts at some point. Alex, thank you for joining. Welcome, guys. Mikael, thank you for joining. Argent, Sia, Shipe, Mirdita, thank you. Ingomar, welcome. Okay, so let's get started, guys. Gold, we're going to start off on the daily. It is 7:17, so we have about 1 hour until we hit the Comex market open. So we got enough time to do good analysis on gold and NASDAQ. We'll have those two charts done, and then the plan, what we do here after 9 a.m., then we'll add US 30 in there, okay? But we'll go through everything. So normally, these are what we see on the daily candles anytime you're doing a higher time frame analysis. So it's pretty much the same thing we're looking at. Again, our all-time high is 3,500. Most of you guys do know this here. And where's the bodies of volume? Right there. So when we got the all-time high, the body is kind of, the 2-day volume stayed in there. So that's what I always mark up. I kind of consolidate that volume. I stretch it into the future. And then you can clearly see there's the double top and then the retest of it. And then we had that leg pushed down. So let's stretch this into the future. And gold is, you can see it's slowly creeping up back. It might get up to that red zone up there. And we'll test up there and see what happens. Or it gets rejected around here with a lower high and might push back down. Do we have a nice supporting zone that we can talk about that's been tested? Right over here, you can see that was a bullish flag pattern. And again, if we stretch this zone into the future, you can see when this bearish leg from the all-time high started to come down. But where did it stop? Where did it pivot? Right inside this green zone right here. We had that next push up, and then again, nothing really materialized up here. They dropped it, retested it, and as that leg was coming down, you can see then we actually broke it, and it pushed down right down to there last Thursday. So there was a push down of it, but quickly it came back up. So I placed that wick as a yellow line to give me a daily point of interest right here, and there was quickly came right back up, and you can see how the bullish candle closed kind of right in that zone. Then we kind of barcoded here. We traded sideways where it was bearish, came back up bullish, came back down bearish, but then made a higher low and closed below it. And then right here to start this week was a bullish ignited candle that continued to push and close. And then now yesterday we had a open, it came down. See how it just still respected this green box, came up with the wick, and it was a very bullish candle yesterday that kind of broke and closed very strong. So just basing off of yesterday's bullish candle, can we identify 50% of that volume? That's again me just guessing where it is. To avoid guessing, guys, grab this tool right here. It was formerly called Fibonacci. Now it's called the Ronny tool. So right there, there's the 0.5. So we've changed the name of it, just like the body of water, from the Gulf of Mexico to the Gulf of America. So this is now Fibonacci. Now it's changed to Ronny right here. And there's the that nice little zone right in the middle, one notch above, one notch below. So if you can stretch that zone into the future with this zone, you can see that this is just representing yesterday's volume. The bigger zone is down here. So this is more for like maybe an immediate retest, a first touch. If we get a pullback on the daily, maybe right in there, we might get a bounce. However, this is not the critical zone. The bigger one is down here because more of the daily volume was concentrated in here. But if it does come down here and it respects us and we're moving, then we can maybe attempt to come into this red zone above us. Okay, so right there we've got a zone, and then from yesterday it was very strong. Gold had a good day and got closed. You can see right over here this big bearish candle. Okay, that candle pushed all the way down. Can we identify where 50% of this candle body is? Bearish body, so we can see relative. There it is. There's the 0.5. So what I do is another point of interest at the 0.5 right there, and then now I can see relative to what happened with yesterday's daily volume. So you see it broke above the yellow line, which was exactly 50% of this bearish volume starting the week of Monday, May 12, and we actually pushed, and look at the volume closed above. So you see how now this yellow line is acting as support momentarily. So we can see now, let's follow today's daily candle. So we closed there yesterday, we opened right there. Okay, again, it's a lot of lines. I just want you guys to understand right here. There was the close of yesterday, there was the open. So I can see there is a wick on today's candle. It's not just ignited and pushed up. There was a little bit of a pullback, and where did it pull back into? There's our wick right there. So that's the low of the day. Again, I'm gonna get rid of these, so I just want you to see that's the low of the day right there, 32.85, and you can see how it has not touched 50% of that bearish candle yet. So it has created a higher low, and it came back to the opening price, and we pushed and we took out yesterday's high. So since I have a lot of these lines in here, I'm going to keep this yellow one because this one represents 50%. I'll keep the low of the day, but our opening price and the closing, I'm just going to move it up to represent yesterday's high. Okay, so if we do come all the way back down, that would be the first area we test. Yesterday's high resistance, maybe it's going to act as support at 32.95. If we can't hold there, then we will come back down and test 32.89. But I'm just trying not to have so many lines in here. Okay, and then what happened? Gold was bullish. Okay, continued to move up, move up, move up, move up. But remember, we do have all of this behind us. Okay, this was a bearish candle. That was the retest and push down. We had this little 3-bar consolidation, then continue. So it is looking good. It is bullish on the daily. We are coming out of here, but we still have all of this supply to the left of us over here. So buyers are doing great on gold. They are pushing it up. We made a high of the day. So let's take a look at our high of the day. Right there. Okay, so our high of the day is approximately 33.20, and that's our entire range of today's daily candle from this purple line to that purple line. We've been getting rejected there, and you can see it's still below right over here. So what I like to do now is I kind of use this purple line as kind of like a cut line, kind of like a tool going through here, and then I just look at the body of volume above that purple line right there, that 2-day body of volume. You see that right there? So what I do is I kind of make it red to represent that there is still supply there, and just move it into kind of today's body of volume. So if we come back at the high of the day, then we still got to come up to clear that body of volume right there. If we can clear that and it has kind of like an impulse breakout on the daily and it comes through there, there's the wick right there. So maybe we can target coming up to here, and we go slowly up this ladder and we see if we can continue to fill that wick, and then there's that next body of volume. That's more of a point of interest from that close to that open, and we'll see if we can get up there. But maybe that might be some resistance in the market where it's coming up and it maybe cannot break this and might pull back down. Okay, but we'll judge how strong today's body of volume is. And then finally, what I do last is I judge how much volume there is in the current candle with 9.5 hours to go. And I know it's moving, so it's kind of difficult to do this, but I grab this tool again and I place it exactly where the volume is. See how it just moved on me when I was moving it? And I look where the 0.5 is, just to tell me where half of the current volume is. Right there, I used the wrong line, I'm sorry. I use a yellow line right here, 0.5. And again, that's to represent where 0.5 of the volume is. If you want to draw a zone, you're more than welcome to draw a green zone, which represents the heart of the bullish volume in today's candle, just so you know if it comes back down there, that we're coming into this really, really critical point of control on the daily. So that's buyers are still in control here, okay? And then what I do is then I look overall picture of the daily candles and the pattern. So this is what it looks like. There was this long rally coming up, which hit the all-time high, 3,500, but the body of volume was right there. So it came back down. That's the one top, came back down. There's the neckline. There's the support. It came back up. There's your double top. It looks like a capital M coming back down. And the M actually broke the support here, but as it dropped, that's it. That's where it stopped. Roughly 50% of that big bullish candle. But this entire zone, all this choppiness, that bearish candle, that bullish candle, that bearish candle, that bullish candle, right around here, still inside the green box. I can still see they took out the lows down there, but coming right back up. So it looks like it's coming. Maybe we're going to test here, this red box for a lower high. Maybe we'll push down. Maybe we can break. Maybe we can touch that yellow line. And ultimately, we want to see if we can get into maybe approximately 50% of that red zone right there. And look at the number 3,400 on the dot. Okay, so it's a nice psychological number, but we still have lots of work to do to get it up there. Okay, so looks good, but we're kind of trading in the middle of this zone right here. And this is where a lot of consolidation can happen in here, or sellers can push it down. But when they're pushing it down into supporting levels. So we'll see if it can get picked up and continue to go. Okay, so right now, daily looks strong. It's continuing off of yesterday's bullish volume. So let's go into the 1 hour now, 60-minute time frame. Let's see what we see here. Okay, so right there, that point of interest, that bottom, that was Thursday, 2 a.m. pre-London. Good push right through there. Coming up to Thursday, this is the futures market open, 8 p.m. now. Then it kind of sold off going into London, and it found another bottom right over here, 8 a.m. on Friday, and continued to push up with that higher low, and then consolidate in here, continue to push back up. Break, couple retests of this. This was Tuesday, 9 a.m. yesterday. Gold looked really good, and you can see the continuation of volume throughout the entire day. Started to consolidate right over here. This is 3 p.m. power hour, 4 p.m. Then you got your after hours over here. Then futures, and we continue to make new highs. Big bullish candle coming out at 1 a.m., 2 a.m. There's London, 3 a.m. So we can see the high of the day is basically London's high over here, and they pushed it right back down. Now you see how it's getting a little consolidated in here, a little choppy. So we're just trading sideways right here now the last few hours. So is gold going to make another attempt to come up to the high of the day up here and maybe possibly trade in this red zone up here? Or are sellers going to push it back down? Maybe we're going to trade into this green zone. So right now, you can see we're right in the middle of it. This is where consolidation happens. Not the greatest area to be trading. We saw that on the 1 minute education we did yesterday. Remember when I took a trade right in the middle and it didn't work out? It would have been better to wait for those 1 minutes to come into the green box, or it would have been much better to wait for the 1 minutes to come into the red box to look for a better quality trade. So the same thing is on the daily, on the hourly over here too. If you can wait it out to see what type of reaction you get in here, or if you can wait it out here. But I understand a lot of traders want to trade and continue with the momentum. So what I look at is an hourly. I see this big bearish candle coming down. So can I locate about 50% of that hourly candle? Definitely we can. We'll grab our tool. We look for 0.5. There it is. But I'm going to change the color now to white, because this white line now at 3,315 represents hourly resistance. So I can see that now we broke above it right there at 6 a.m. It was an impulse, and then they pushed it right back down, and they closed it below there. Again, this hour, it came up again impulsively, and it's a lower high from there, and it's a lower high from the daily high, and they're pushing it back down. But you see, there's a lot of hourly support right in this area. So let's place a white line right around here. Okay. Oops. Sorry, guys. Wrong line. I see my daughter's been playing with these tools over here. My daughter's 8 years old. She secretly comes down here on my trading station, and she analyzes candlesticks, and she plays with my tools over here. So she's learning, guys. She's learning on her own. So I hope you guys are also learning on your own too. It's not easy. I asked her, is it easy? She said, no, it's not easy. It's complicated. So she's learning, but she's waiting for the volume to come into these bigger zones as well. So she's going to be on here taking over soon because I'm getting too old. So she'll be in here very soon, and she'll be educating all of us as well. So right there, why did I pick this zone? You can see it's kind of resistance there, resistance there. It came down, it retested it, acting as support there. There it broke, and it came, look at where the volume closed, right at the white line. Again, over here, it broke where that candle opened, still holding here. Pull back, still above that white line. This hour, so you can see really now where the volume is kind of concentrated in here. So maybe we got to wait for some volume to close above this white line. Maybe we need to wait for some volume to close below that white line. Maybe that will give us the direction that maybe it will push down into the green box. Maybe it will give us the direction that it will continue to go up to the high of the day. But right now, it's just accumulating right now, okay? And then when we look at like the hourly kind of pattern, you can see it came up bullish. There's the top right there, high of the day. It came back down. Did it come down into the green box? No. So they're kind of holding it right here. And then did it come all the way back up? No. So kind of the volume is just stuck in here. So we could definitely maybe continue to come down to the green box, or maybe if it holds, continues to build a little bit, then maybe we come up here, maybe close, retest this, and then we're breaking that high of the day. Okay. So right now, you guys probably see on the 5 minutes, it's probably not the greatest to trade in here, but let's go to the 5s and take a look. Yeah, so you see the 5 minute bars. So this, remember that was that hourly resistance, white line, 3,315. There was that hourly supporting line, 3,308. I can see how the 5 minute candles are trading in it. So again, when you want to measure that zone, 15 and 8 is a $7 move. That's a 70 pip zone from the white line to the white line, which is great for scalping, but you can see how the market is just coming down, going back up, coming down. There it broke, okay, but nothing came into the green box, came right back up. Look how choppy it got in here, all those false breaks, and then right there, it actually closed above, it retested it, and perfect opportunity to drive, and look at right there. So you see how I was looking at 50% on a daily candle. I was looking at 50% on the hourly candles. Why can we not look at 50% on a 5 minute candle? So, and also on the 1 minute candles. 50% is a psychological zone. It has nothing to do with like time frames and things like that. Every single body of volume has 50%. So right there, if I was looking at 50% of this candle, and this is a pretty important candle. It's not just any candle. This is 3 a.m. Okay, so this is London market open in the UK. So you can see how that's what took out kind of that high of the day up there, the purple line. And then look at London's open at 3 a.m. Big bearish engulfing candle that closed below all the structure. If I'm looking at 50%, there's 50%, and look how it's static line going into the future. And look at that move that retested that hourly right there, that push. But look at what stopped it from going down was this 5 minute candle. And then if we draw a zone a little bit above, a little bit below. So you see how I do this a little faster without the use of that Fibonacci tool? I do this faster because on the 1 minutes, sometimes you don't have the opportunity to grab all your tools and go because the next candle is already closing and opening and you might be in a trade. So if you can learn how to do this quickly without the tool, that's fantastic, because when you go to the lower time frames, then it's a lot faster. So same thing, same analogy. We figure out 50% right there, and had we stretched it into the future, now you can see where it came in there, got rejected, came in there, got rejected. It came in all the way right to that, right in the middle, and had that big leg pushing down. So why don't we continue to stretch this 5-minute zone into the future? And now what I can see below it is a lower high and a lower high. So the sellers are pushing this thing down. And now it might close back below here and retest this, and it might actually drive down to this green zone. Okay, so you can see how they're protecting the high of the day right there. There's the purple line, and now they're building resistance below it. So they're pushing it down momentarily. Okay, so you can see how we can utilize different sessions to see important times and how they react going into future sessions. Okay, so on the 5-minute, and then see that's a big bearish candle right there. So if you get your cutter line, remember OT Genesis, we've got to cut it. There's our cut line, and we watch to see now what type of reaction we get from buyers. Can the buyers come back up on the 5 minutes, and can they maybe close above 50% of that bearish candle, maybe build off of this, and then where could they go? They want to continue to fill that point of interest right there and maybe come back up to that hourly white line, okay? And if you're trading that, if you're scalping that from the red line, 311, let's say, to 315, $4 move, that's 40 pips. So when you're kind of anticipating or getting into a trade, then you know exactly kind of what you're looking for, and you know where it could possibly go, and you know where there's resistance, you know what to look for, okay? So this is not the greatest area to be trading anyways. It's in a tough range, but we'll see. Maybe Comex will start to open things up. Maybe they'll start to redistribute this volume. But right now, it's very tough in here. Even if, like, when we're looking at, if these were 1-minute candles, this is exactly like yesterday's session that we were having, and it was very, very choppy on the 1 minutes. So even on the 5 minutes right here, it's very choppy. So in my opinion, it's not the greatest to be trading in here unless you know what you're doing and you know what you're looking for quick little scalps in here. Otherwise, we wait to see the bigger move. Okay, so that is gold. We'll also add the common indicators that most of you guys use, which is a 9 EMA, exponential moving average 9, which is this green line. The volume is currently below it right now. Let's add the 200 EMA. Okay, this is this purple line right here. You can see the 200 EMA is starting to go into our hourly green demand zone. So if the market falls in there, right, look at what we're falling into. So if you're selling the market or if you're looking for a buy, if you're a seller, you're selling into an area of demand, and also that yellow line, 3,300 psychological area, and it's a point of interest on the daily, and you got your 200 EMA. So there's a lot of confluence in there that maybe there's a lot of pending buyers waiting in there to get activated and then to take it back up. Okay, that is a possibility. Okay, but however, if this volume that's coming down here is strong selling pressure, it may just cut right through here and close below. Then if that happens, when the buyers are coming in, we flip this green zone red, and then that area of interest, that yellow line, that point of interest could be resistance now, and the 200 EMA might be there, and then it comes up there and it retests the 200 EMA that, and we make this red zone, and then more sellers are in there and they keep hitting the bid, and the price of gold keeps dropping down to where the purple line, that's the low of the day. Okay, but there will be some sort of transactions occurring in this zone if the volume gets down there. Will it be bullish? Will it be bearish? If you wait for candles to close, we'll get a concrete answer. But if you're anticipating maybe a pending order out of here, right now it could be buyers. We can see how it came down right here with that leg, and then you can see what happened coming out of there. Okay, so are we going to come back down? We'll see. What else? Oh, guys, this is a neat little someone mentioned this to me, so I added it. What it is if I add this to my chart, you see this big green candle? So this is the daily candle. If you want to keep it on the side right over here, you can see how this is how the daily candle of gold. There's the opening price right there, 32.89. Remember, I didn't place a yellow line at the opening price. I placed it right there. This yellow line is representing yesterday's high. And there's my purple line at the low wick. So you can see how the daily candle opened. Right there was the opening. There's the low. So this will stay beside me on all time frames. I can even go into hourly, 15-minute, 5-minute, 1 minute, but it just gives me a snapshot of the entire daily candle. So it's to think about, should I be selling the market? Should I be buying the market? Now you can clearly see a visual representation of the volume the entire day. So you can see it came up. There's the highest point. See, right at my purple line. That's how I do it. I did it, years ago, prior to all of these technology and now them showing you visually. So this is an added benefit too. And you can see we got rejected. And then there's the volume. So see how these 5-minute candles are pushing down? Like, look how much, and then right there, there's that heart of that green volume. So if it comes down in there, that's where you can see the majority of daily volume is sitting. Okay. How did I add that, Mark? Go to your indicators right over here. And this is all on TradingView. It's a free indicator. It's this one right here. HTF, guys, if you want to take a snapshot or add this, if you guys like this indicator, it's right here. HTF power of 3. And that's the one. Okay. If you want to add that, it's right there. HTF power of 3. It's a really cool indicator. So it's right here. And then when it comes up, it says point of 3. It's right there. So I can go like on any time frame daily. Okay, there it is. So now let's just, just so you can visually see it. Here's today's daily candle, right? There's the opening price. There's the low. You can see. And then there's the big volume coming in where it hit the high of the day. And now it's coming down. So you got that right beside you. So if you kind of want to look, there it is on the 4-hour. If you're a 4-hour trader, you got it right beside you. If you're a 30-minute trader, it's right beside you on the 30 minutes and then on the 5 minutes. Okay. Do you guys want me to keep that on there for gold, or I only have it on like the gold chart. I just wanted to add it to show everyone. But we'll keep it there. Maybe we'll keep it for today's call, just to see how everything reacts. Okay, so we did gold, guys, right over here. We'll keep gold on the left. Okay, and while gold is still in this range right here, do you guys mind if I do NASDAQ right now? And or should we be watching? What time is it? 7:43. Okay. Get nasty, Ron? Okay. Efren, I'm going to get nasty here, guys. In a good way. We're going to do the nasty. So let's do NASDAQ. And then we'll have both of these securities done for 8 a.m. We'll watch gold and NASDAQ. NASDAQ has nothing to do with Comex, but we'll watch both of them into 8:30. Normally we have red folders at 8:30. Nothing this week. And then we'll get ready to do the Dow just after 9. Okay. So are we good, guys? Jitendra, you've used that indicator too? Oh, nice. Okay, good. Yeah, I was introduced to it the other day and said, why not? Let's check it out. Okay, so now NASDAQ. Okay, completely different security now. This is more tech related in the US stock market over here. Let's take a look at on the daily how everything is moving. Okay, so number one, we've got our double top all-time high supply right up there. Okay, stretching it into the future. Wow, we're not too far away from tapping into that all-time high. Is it going to get up there? Or time will tell. So that's roughly around 22,250 all-time high. Good supporting area that we could see back in the past was right there. If I make that zone green, now you can clearly see how it came up. It came down in that green zone. Back up. It came back down in that green zone. Back up. Came down in there. Consolidated in there. Back up. Couldn't break this supply. Came back down. So it was in a clear consolidating range of accumulation. And then finally, the second top, that's when they redistribute a lot of the volume. There's that kind of consolidation right in there. Then we got bearish bars closing below. So at that point, we can change the color to represent resistance, supply, sellers, whatever you call it, and stretching it back into the future. And then what I do too is see where it came up and it didn't tap into the red box. So that's a point of interest. They held it down for a reason right there. So I place a yellow line. And then also I just kind of follow it. I build as I go along. So the next pivot where it stopped, it stopped right there. There's my next pivot of support in the market right there. And I just go with the flow of the volume, continue to move this across. So then I see it held. It came right up there. Did it tap in there? No. So then it came right back down. Stretch this green zone. There it is where the big fake out candle where they started it bullish and then it closed below. So at that point, flip it red, you know, and then it came down. There's the next big strong supporting level right there. Okay, so just see how I kind of build my own little zones. I know it's a funny way how I do it, but that's like the lowest point. So again, the lowest point, I kind of make an orange color to represent Donald Trump's makeup face. And that's the lowest point, 16,340. Why does that guy use orange makeup? Why? I've always wondered this. I don't know. Like, does anyone know why? Like, why orange? Why? Why can't you just, if you want to use makeup, I would never use makeup, but if I did, I don't think I would choose orange. Why is that? Does anyone know the answer to that question? Please. If I was a reporter in the Oval Office and I got asked a question, I wouldn't be asking about tariffs and things like that. I would say, why do you have orange paint on your face, orange makeup? Why? Why? Please explain this. I'd love to hear his answer on that. I have no idea. For the life of me, for years, I've always wondered that. I've never seen anyone else wear orange makeup. No clue. What does it do? Why? To match his hair? Oh, Melania's his makeup artist? Is that what it is? I don't know this. But I don't know. But there's, okay, so this is, you guys remember when he said, you should buy the markets, and then it came right back up. Okay, look at where it came right into that red zone. So if we stretch this again into the future, now you can see bodies of volume closing above it. So what should we be doing? We should be making it green, right? And stretching it into the future. So you can see that this is a supporting level. This is a supporting level. That's the extreme lowest point we've had, and coming right back up. So now let's continue with this red zone. Going across, that big body of volume last Friday kind of closed, retested it. So this is a green zone now going forward. And look at the daily candles, how they've just been now consolidating where? In the middle of this red zone and green zone. So we talked about this. Guys, you need to join our 1 minute education sessions because we learn a lot in about 90 minutes to 2 hours where we see 90 to 120 candles open and close. So I made a mistake yesterday trading a 1 minute candles right in the middle. I got stopped out. And had I waited for the 1 minute candles to come down like in this green zone or in the red zone, that we saw that there was better quality setups. So we can learn faster. So I pretend like these are daily candles, but I also pretend like they're 1 minute, or if these were 1 minute candles, would I be trading these? So if these are daily candles, so you gotta consider, what is the market doing right now? It's still accumulating to either make its move to test the all-time high supply. So they need a lot of accumulated delta positive volume to get up there and either test or break that area. So maybe they don't have enough accumulated, so they're keeping it in a tight range this week without breaking the structure below us. You guys know what I mean by that? Okay, so now, like, if we really now start to dissect what's going on between this red all-time high supply and this demand zone down here, do we have some structure that has already been built in here from all of these daily candles in here? So that's what we kind of look for. Right here, here is a point of interest. And I'm not just choosing this area like how it looks like. I'm choosing this area because of previous touches over here in the markets. So if I see right here, see this big bearish candle that kind of closed below? There's 50%. Look at the retest of it. The impulse, volume stayed below. Impulse, volumes closed at it. Here was that impulse, volume closed below. Then they pushed it down. There's volume closing at it again. Volume closing, opening, retest of it. There's the body, the bearish body that closed below it, representing kind of 50%. And now you can see it's acting as resistance up here the last few days at 21,000, just over 500, 505 up here. Okay, so it's still consolidating right inside here. Let's just test something out. Grab the Fibonacci tool from the bottom of this red zone. Let's take it down. Let's take it down to the top of the green zone right there. So you see there's the actual 0.5 of the entire zone right there. So you see where this yellow line is? It's right below that 618 at that 0.5. So you look at where we're trading. Had we done this little, that zone a little bit above and a little bit below, right there. You see, like if I make this a neutral zone, maybe you'll see how the volume now is consolidating in this very critical area that could continue to build to go back up. So kind of trading in here, this is like not a good trading zone. High quality setups are not going to come out of here, okay? We got to either wait for maybe the push up here and see what happens at the all-time high supply, because more things will happen up here. If it comes up to the all-time high supply, I'm just pointing out the different options what could happen up here. It could definitely come up here, touch in there, and get rejected and go back down. Okay, that's a possibility. It could also come up there, break through there. Maybe it's an impulse with a wick. Then they reject it down, and then when the daily candle closes, it closes below there. Then it comes up strong again the next day, and then gets rejected, and then we push down. So you can see both of these scenarios are pushing down. One is just the first touch, gets rejected. The next one is like an impulse break. Maybe they grab the liquidity up there, and then it closes below, retest, and drop. And then the third option is the buyers bring it up there. They close it above there. Now we got some good positive volume closing, and then we change now with the daily candle closing above. We change that all-time high red supply box. We make it now green, and then the pullback might come in here, and it's green, and then all of a sudden we have a new all-time high in NASDAQ. So but more things will happen at this red area. So if you're patient and you wait up there, you could look for a higher quality trade, okay? And the same is for, same scenario, if we push down into the green box. Again, it could just come down, bounce up. It could come down, break like an impulse, but then have a wick come up and close above, and then we continue to go up, and then I know that they grab the liquidity below us, or the sellers push it down, close it below here, and then we flip the green box red, and the next day when it come up, they get rejected, and then starting the move going down, okay? So it's a lot that I said there, but hopefully you guys understand. Trading in the middle of a zone, you're trading in that point of control where buyers and sellers are jockeying for position right here. So you got buyers are buying, sellers are selling. Buyers are buying, sellers are selling. Again, it's an accumulation game now. Do they want to, what I ask myself is, are they protecting this all-time high supply from not coming up there? Right now, they're preventing it from coming up. So that's the resistance right there. And then also, do we have maybe some good supporting levels right now? I can see this big bearish candle that came down traded right into about 50% of that bullish candle. That was a very important bullish candle. That was the one that closed above here with the volume. So look at the first retest of it right there. 50%, guys. Okay, I did not use the Fibonacci tool. Sometimes you will clearly see if you just if you see a wick and you place a line, you might literally see that it is exactly 50%. That's how I learned how to do this. No one taught me this. Who would teach me this? Probably a crazy person. Like, I'm teaching you this. I might be considered a crazy person teaching you this. But when I started to watch candlesticks on the 1 minutes for 24 hours a day, just watching these things, I'm like, why does it always want to come into 50% of the previous big bullish candle? Why? And then I started to see it wasn't just a one-time thing. This was happening every single day, and it wasn't just on the 1 minute. I said, is this happening on the 5 minutes? And yes, it was. I said, is this happening on the hourly candles? Holy shit, it is. Is this happening on the daily candles? Oh my God, it is. Is this happening on a monthly candle? Holy shit, it is. Is this happening on a yearly candle? Oh my goodness, it is. So this is a psychological thing here. This has, like it's more than just price action. This is the psychology of the markets and price action. Discounted and premium areas and points of control, fair values, whatever you want to call it. Okay. So right now in the daily, like if I saw this and I was a swing trader, I wouldn't even be trading right now. I would be looking for something up here or down here. But us, we're crazy, we're scalpers, we want to do intraday trading. So let's make some sense of today's daily candle, okay? And then yesterday. So yesterday was bullish where it came up, could not break this zone up here. So you see now we have a point of control and I got a body and a body and a wick. So I know it's a lot of zones, but I want to show you what I do. Okay, so you see right there, it's this zone. I make it red and I stretch it across. So I know that the buyer's got a lot of work to do to get up there and close it above there. And I can see how the market is pushing down from here. Okay, you can kind of see 50% of the volume that was left from yesterday. Again, where's 50%? Right there. Is it? Have we closed above it? Have we? No, I can look at today's high where we didn't even come up there. And look at the number right there, 21,401. Okay, 1 pip above a psychological level, 21,400. Okay, so yesterday we were very bullish. We came up there, got rejected, came all the way down. There's yesterday's low where all of these wicks are. So a lot of buying going back up, coming right back up. It closed right there. So now when we're doing our daily analysis, our points of interest, the closing price and the opening price right here, no gaps in the market. We had a bullish day on NASDAQ coming all the way up. Our high of the day is right here. There's my purple line. And it is roughly still below 50%. So the sellers are still in control from the red zone up here. Sellers are lowering their offers. They're still hitting the bid. Buyers are not asking to trade up here. So they're failing to continue this trend going up. Today's high then came back down where it opened and sellers were in control. Sellers were in control, took out yesterday's low, continued to push down and create a new low right there today. There's our purple low of the day. And then I look right here, the start of the week. There's the start of the week, Monday. Is today's low higher than Monday? Yes, it is. So we've got a higher low, and then the buyers are bringing it right back up. And then here's what we got to trade today, this volume. Again, if you want to look at 50% of the current volume, right there is half, right? And then look at right now how we're doing this. Half of the volume right there lines up with that body and that body right there, okay? It's not just like by chance that it's right there, but there it is, okay? And then if we do come back down, okay, where do we have good supporting evidence? I know it's a lot of lines, guys, but I just want you guys to see this, okay? So you see this big bullish candle last Wednesday? Grab your Fibonacci tool, opening price, closing price. Okay, this is where I'm going to draw a zone, a little bit above, a little bit below, right there. Had we done this on that day, I probably would have been doing the same shit and stretching it into the future. Then I can see this daily candle came right in there, back up. I can see this day broke it, but came all the way. Volume is still above there. Here, yesterday, yesterday's low right in that green box and back up. Today, now I can see we broke it, but the volume is still above it, okay? So I know it's really confusing, guys. It's really technical, but this is the type of analysis when we're in a tough zone. Okay, so now you can see we do have some supply above us. We do have some support below us. And then now you can see how the volume is just, maybe a bullish flag pattern. It's building, it's building. But what I see is now one top. So it came up, there's the top. It came back down, maybe support. What's the next move? Will they continue to push up today's bearish volume, maybe flip it and turn it bullish to come back up here? Or is that's it? That's the lower high, and now sellers are pushing it down. Maybe today NASDAQ will close below here, and then this zone will be red tomorrow. and then maybe Thursday is a selling day in the market for NASDAQ. Okay. I can't determine that right now because it's still early. We still have 9 hours to go on this daily candle. We're not even in Wall Street yet. So this might be a completely different candle by 11 a.m. It might be a bullish hammer, you know, but this is where we're trading. This is the volume right now. This is the range. You decide if this is what you suitable to your trading style. If not, stay away from this shit, you know, like that's what's going on. But now from the daily, we can go to the hourly. Okay, the 60 minutes. If you want to trade 60 minutes, this is what we're looking at in the 60 minutes. Okay, so there was a big breakdown that got gobbled right back up here. Monday, start of the week, 5 a.m. So there's our weekly low, and coming right back up. Strong move into this zone, got rejected. Look at this. How do you trade this? Like yesterday. Remember how choppy it was yesterday? Oh my God, it was, look at this. Like it was a chop fest yesterday. If you avoided trading yesterday because due to the volume, I salute you. Congratulations, because you're a rare breed if you did that. Because every trader I know, including myself, we cannot walk away from the markets no matter, even if we tell ourselves it's choppy, we still end up trading because we're traders, right? It's very difficult. But when I learned to just walk away, oh my God, how good of a feeling it felt not trading this garbage. And then the next day was a trending market and was, but to walk away from this is the hardest thing in trading. Just to walk away and give yourself a day off. But that's why you got to have some hobbies. When you take a day off, you got to be doing something to keep yourself occupied. Otherwise, you're going to come right into this market and this is what you're going to be staring at. And then you can see they kind of redistributed it down. Okay, it came down when? Today. So we got midnight, retest, 1 a.m. There's 2 a.m. London was a pretty good candle. Came up, but nothing, kind of right back down. Closed below. Low of the day right there, 6 a.m. And now we're building right back up. So you can see we're trading now in that green zone, hourly. Okay, can I find out where 50% of that hourly candle is? Yeah, right there. White line representing hourly support structure. So maybe we're building. Look at how it's building right now, okay? So we had our big drop, okay? So it did come down. Let's consider that the bottom. There's our resistance. That would have been a nice, like right there. That would have been a good double bottom, but look at, they broke it, okay? Made the low of the day, so maybe they swept some liquidity, but still if you look at it kind of like a double bottom with the liquidity grab right there, then next thing is we got to kind of break above these wicks, and then we might see a bullish NASDAQ come right back up to 21,320. That was where it got rejected at 1 a.m. prior to London. And then if we can break there, maybe the next point is right there, 21,352. And then I know the purple line is my high of the day right up there. Okay, so it is building right now. It's building in a good supporting area, but sellers are still maybe pushing it down. If they close it below here, then it might be a bearish day, continuing to come down, selling back down to the low of the day, maybe possibly break a little further down. Okay, so right now we're still stuck in here. Okay, so if we go to the 5 minutes now, and if you want to draw yourself a trend line just to show you, like from here, where it all started in the red box, if we keep coming down, coming down, coming down, and I don't have perfect trend lines. I know someone said to me, Ron, your trend line is not perfect. It's not touching all the wicks and everything. Okay, I don't really care because the trend line for me is just kind of a guideline. Okay, you're never going to be perfect with your trend line. I'm trying to keep it perfect with those wicks, that wick, with that wick, and you can still see how we're pushing down. So in order to have like a complete reversal, we got to build through here. Like that's what I mean. If it comes up bullish to that yellow line, you still see you're at the trend line. It might be like a break and then have to come back and retest and then start to build out of here. Then you have your reversal, okay? Otherwise, it could just come back up, make a lower high and get rejected back down, but it's pushing down. And then you can see from kind of here, we're in this parallel channel, okay? I know I don't have a perfect trend line. Someone said, well, Ron, why didn't you grab that wick? Why didn't you grab that? It's just to show you kind of the general move. Those are then impulse moves, come down, got gobbled up in the green zone, and the volume closed right above. Here again, This is the candle that broke for the low of the day. And then look at where it came right back. The volume is still within this channel. So that's what we got going on right now for NASDAQ on the hourly. 5 minutes. Sorry I'm spending so much time on this. I apologize. But now you can see, okay, so on the 5 minutes when we're trading, there's the bigger hourly trend. There's the fake out candle you can see, which had the wick on the 1 hour. Now you can see how the 5 minute candle came right in that green zone, and then it came right back up and just continued. So that looked like a fake out right into the green zone. Again, here's a fake out right here. That created the low of the day. We came right back up. So you see the 5 minutes now? The 5 minutes have their pivot points, okay? This is why it's so important to look for pivots in the market right here. See where the market came down at those bodies of volume? There's the wicks, okay? So had we acknowledged this area, let's see how the market reacted again at this red line. It came down, stopped, went back up. Here it closed below, the leg pushed below. Here it came back up. Has it traded into this red line yet? No, a little lower high, they pushed it back down. Then it really scooped up all the liquidity down at the low of the day and came roaring right back up very strong. It's kind of like a parabolic move where it's just single bar candles making higher highs and higher lows and higher highs and higher lows and didn't stop. And look at where it stopped. Again at that red line. And now you got these 3 big bearish candles pushing right back down. So can we make a zone out of this? Definitely. Now we don't just have to keep a line. Now we can kind of maybe make ourselves a zone right there. I grab all of that volume. And look at how it's those wicks, okay? So I know it's a lot of zones, but this one is a smaller one representing the 5 minute resistance. So now as buyers, if we can kind of close above here, we're getting close to the trend line breakout and continue to go up there. But we got to see how it's building out of this green zone right now. So that was a beautiful move coming up. But let's see if it can continue to build in this green zone and come back up. If not, the sellers close below here. They might have one more leg coming down. Okay, so what I'll do is we'll now focus more on the 5 minute kind of area. So right there, again, that's the lowest point of the day. That's where that big leg came from. So can we just visually be ready in case it comes back down here? This big green zone I'm going to get rid of, okay? We're going to focus more on these zones here. And points of interest right here. Why this area? You can see kind of, whoops, not the white line. What does it look like, Lee? Looks like a possible inverted head and shoulder. Yeah, it does. Exactly. So what Lee is talking about, inverted head and shoulder, okay? So this entire kind of range in here, left shoulder, there's that inverted head at the lowest point of the day, and then it came right back up. It did break, but you see we're still struggling to break this red zone, and we're right back in now the shoulder area right here, the left shoulder. Now we're back in the right shoulder. So that's why, can we build and continue to come up, maybe retest this, maybe a double top, then maybe a pullback, and then we break maybe an impulse. Okay, beautiful impulse there. Then we can close above there. We change the red box green, maybe a pullback, retesting it. And then there we have our possible bearish to bullish reversal breakout today. Possibly, but look at the sellers now pushing it right back down. So if you kind of want to consolidate this area now from the white line and this red line, like right there, if you want to consolidate, just so we can see where we could be trading. Again, this is the shoulder area. Now you can see that the bearish volume coming right back in the shoulder area. So kind of now maybe I want to look for buys from here to come up to the red box. So I can measure it. If I'm looking for these type of buys to fill up back up there, that could be about 30 to 35 pips coming right back up there. If I look for something like building here, if I see it come back up, maybe close here, retest this, then maybe I could look for a buy to come back and fill there, and then I see what happens out of there. However, I could also be looking for maybe potential sells below here to maybe push down, maybe all the way down to that green box, that's 60 pips. But what about halfway? Because I know that they could be building some support down here, right? It's not just gonna maybe just fall right back down. What happens if it comes down, you know, like where, and then it comes down and then it finds a higher low, probably in this structure right here, right around there, it finds a higher low, and then they bring it right back up, okay? So that's what we gotta watch for. That's why I always have, where there's key levels, right there, that's a key level I'm watching. It came down, it closed right there. It came down, closed above there. It retested it, and then that red line, that big bullish candle right there, is representing maybe like 50% of it right there. So if it comes down, again, look at the same distance, 34, 35 pips, right down to there. Because if they protect it and they make a higher low, then it's not going to come all the way down here. Okay, so that's what maybe we watch for. Okay, and then inside here, we don't trade this. We let it accumulate. We look for trades above here. And then again, that's just for small scalping. Bigger moves will be made like somewhere around this red zone if it's a fake out again or a breakout. And then more moves will be made at the lowest point of the day. Will it be a fake out, liquidity grab and go back up? Or is it actually going to close and we have a bearish day, continue push down? Okay, so if we add EMAs now to our crazy chart we got going on here, what do we got? There's our 9 EMA. We're below the 9 right now. Our 200 EMA, purple, is in the red box. Okay, so volume is below the 200, volume is below the 9, so it's pushing down bearish right now. Okay, so we'll watch these. We'll do US 30 at just after 9 a.m. Okay, so I'll put 2 of these together. And then we'll bring US 30 a little later on. Okay, so it is 8:12. We have 8 more minutes to go into Comex. Gold still hasn't done anything. Okay, so hasn't really moved anywhere. Still within this zone in here. Okay, so still waiting in here. Okay, guys, so hope everyone's doing good. If anyone needs a break, you're welcome to go take a break. You've got 8 more minutes till Comex market opens. Is anyone in testing anything out? Is anyone in a trade right now on either one of these securities? It helps me with my analysis if I know you're in a buy on gold, maybe you're in a sell on gold. Sam, you're waiting for gold, too much chop. I understand. I want to stay away from that as well right now. Is this big bullish candle, the daily candle, that indicator bothering you guys, or is it okay? It's the first time I've ever used this on the charts. So, CC, no problem. My pleasure. Dougal, your EMAs are looking weak right now. Oh, Alex, that's what it is. Donald Trump is super pale and he's trying to make it look like a golf tan. Oh, okay. Now I got it. But he's out there golfing every day. Why is he not getting a tan from the natural sun? I cut the grass yesterday and I got tanned. Dago Gold has been in a chop since London market. Okay, it's good that we understand it's choppy, but the question is, are you guys trading this chop or are you avoiding it? That's the question. Because not every single day trading the markets is going to be trending markets. So we're going to get caught in chop. But this is where mature traders will either wait patiently, like hours upon hours, to maybe look for a good setup, or they walk away from the market and avoid this altogether. That was one of my big problems when I started trading, was I was forcing trades in this hectic area, and all I was doing was getting frustrating. I was frustrating myself. I was hedging trades. I was going in buys, then I was adding sells, and then it was a chaotic scene trading this. So if you're avoiding it, congratulations. I'm telling you, it's a very hard trait that traders cannot do. I don't know why. I speak to a lot of traders on a daily basis, and they have difficulty just waiting when they analyze, and it's a choppy market. I think because we always have in our head that we should be in a trade. But I learned over time, you do not need to be in a trade. It's okay to be on the sidelines. It's okay to trade the markets for 2 hours in a choppy set and not even take a trade. I could, like, for me as a scalper on the 1 minutes, I didn't understand that. Like, how could I go in the markets for 2 hours, see 120 individual 1 minute candlesticks open and close and not take a trade? It was, I couldn't understand that. Yeah, you're right, Sherry. I was very, very impatient. That's the thing. Then when I learned over time from all of the mistakes I made, start to learn patience. And when you're more patient, you're going to have more profitable trades or better setups. And the account will take longer to grow, but at least it's growing. If I keep trading in this garbage area, my account's not growing. It's actually getting smaller and smaller and smaller. I'm losing my capital to the point where I'm not going to have anything to trade anymore. So it's okay to wait patiently and grow your account slowly. Remember, it's a slow and steady process at compounding an account. I always thought you could be, I was watching those videos. Traders back in the day were telling me you can get rich quick. Trading is the richest way you can get wealthy very quickly. I bought into that and I lost all my money. And I'm here 20 years later telling you that it is not a get rich quick game. It takes a long time. But if you can set your mindset to understand that this is a 5 year, 10 year, 20 year process, then you can really understand trading and look for better setups and know one day you got to maybe take a day off and go golfing or do whatever you got to do. But I don't know why it took me so long to learn this. I have no idea, but I'm not the only one. I know a lot of traders are suffering from this. Okay, so we're about 2 minutes, 2, 3 minutes away from Comex market open. So gold is just kind of just still stuck in this hourly consolidation. Okay. Um, And again, guys, just a reminder, you don't need to trade right away when Comex market opens. Like if we see a big bullish candle, you don't just got to jump right into it. You can if you want, but it might just be like we saw that in Wall Street market open yesterday. We saw like a bullish candle for 10 seconds and then it got a wick and came right back down. So you got it right now. Everyone says like how you got to now have a disciplined plan right now. If a candle's going to just explode bullish, you got to ask yourself, are you going to be trading it or are you not going to trade it? Are you going to wait for the physical candle 5 minutes to close, no matter how bullish it is, and then you're looking for maybe a pullback? You got to now decide. You can't just decide when the market opens and just do whatever you want. Right now, this is like part of my plan. I go in now, what I'm doing, I'm looking because I was trading US 30 earlier. So now I got to switch to gold. Right now, I got to look at my gold spreads. I got a 0.6 pip spread on gold, so half a pip right now. But that's going to increase leading into Comex. Another silly mistake we as traders make is my lot size, because I was trading US 30 prior, and it's got a different contract size. So I have to adjust it now for trading gold because I don't want to do a mistake. If I just click on gold and it's got my US 30 contract size, I might do something big mistake and lose a lot of money, right? Because they're completely different sizing. So now I got to make sure all of my mental checks are all done. I've clicked on gold now. I see the spreads. I have now a lot size that I'm comfortable using. So now I'm kind of preparing to get ready to maybe initiate a trade, but it's all part of the process, guys, because we had someone in our group make that silly mistake with the wrong lot size. They thought they were putting a 0.1 and it was actually a standard size 1.0. Thankfully, it worked out in their favor, but that could have been detrimental. Like you could have lost your entire weekly gains with just a silly mistake like that. And we do that because we get excited because the markets are opening and we forget everything. So that's why I'm here to always remind us and to remind myself because I've done this a million times myself. Okay, so here we go. I'll be watching more gold right now, but I'll still give analysis on NASDAQ, but watching gold since it is COMEX here. Here we go. So it's 8:20 a.m. Eastern. This is when the Comex exchange opens, commodities exchange. That's what Comex, whatever you want to call it. And it closes at 1:30 p.m. Eastern, Monday to Friday, okay? Just so you know that. So it opened bearish right now, okay? So is it going to come all the way down into our green zone in here? Is it going to catch a wick and go right back up? Is this bearish bar going to close below here? Or is it just coming down and then it's going to flip back up? What did Trump say yesterday? It had more to do with not the markets. It was about he wants to build, what is it, Lee? Calling it the Golden Dome. The missile defense system. Okay, and NASDAQ is moving. Okay, bullish right now. Let's see if it can close above this zone right here. Okay, so we got a bearish bar coming down. But let's see, will it take out this low? Will it come in this bigger green zone? There I have a yellow line, point of control in here, the 200 EMA. Second win. It's boring when you're out of the market. I know it is. But sometimes when you're in the market when you shouldn't be, you're losing money. Okay, there's nothing worse than losing money. I don't care how boring the markets are, as long as I'm preserving my capital. Yeah, bored is better than being broke. I completely agree with that. Okay, so look at that full body candle now. 2 minutes has expired. We have 3 minutes to go. So now it's coming into our green zone. So let's see what type of reaction. And look at the big wick on today's daily candle, okay? So that's the sellers are pushing it down, but now we're coming in here. So this is where we should traditionally see buyers stepping in here, pushing this move back up. 60 pip drop. Yeah, it's a big, this is a big volume, okay? It looks like a small candle, but it's actually from 308 to 302, 60 pips, okay? So we came down, tapped into the green zone. We got buyers pushing it back up now. So let's wait for the full closure of the candle. 2 minutes and 15 seconds to go, okay? So you see the first response was bullish coming out of this green zone, okay? But how will the candle close? Where will it close? Same thing for NASDAQ over here. Will it close above here? Will it retest this and continue to go up? Remember that 35 pip imbalance that I measured over here? Okay, so now it's coming down with 90 seconds to go. So you see the sellers are continuing to push it down. Is it going to come to that lowest point? Is it going to make a new low? Is it going to close bearish inside here? The buyer's going to bring it right back up. So you see the sellers are still absorbing the buyers and still bringing it down bearish, probably almost right down to the low. Do you guys need me to zoom in a little more? And just looking at just this small little trend, it is still pushing down. Okay, so now it's getting more interesting. The last 30 seconds. Okay, so I always say, guys, let's focus on the last 30 seconds of the close. So I'm going to get my cut line because I'm just kind of measuring approximately where 50% is. I will adjust it when the final body closes, but let's see, 15 more seconds. Maybe it has to come deeper down into here, okay? Let's take a look. Here's the close in 3 seconds. So it's a very bearish bar closing right near the low. Okay, so 50% of that bearish candle is approximately right there. Okay, so what we should see is a blue candle being built in here to come back up and at least test 50% of this. If it comes up and it's a lower high, it looks like the selling pressure wants to continue to push down. So here's our blue candle that's being printed. Okay, so notice the wicks. It hasn't broke a low. Okay, so it's still holding good support. Now we got that blue candle coming in, but will it come up all the way and test 50%? See that lower high where they just pushed it down? So it still could be bearish coming down into here. And maybe we wait again till 8:30. Okay, a new 30-minute candle. So you see how it came up, but it's a lower high. It didn't even come near 50%. So still sellers are there trying to push it down. Now what I look for are these wicks. Did it create a new low, or is it tweezer bottom lows, or is it equal? To me, technically it looks still equal, where they're still holding it. Okay, so bullish candle. Is this enough to just take a trade just because we're in this green zone? Not necessarily. Okay, if you do, this is, remember we were talking about the game of chess, where you in chess you use a pawn to test out your opponent and things like that, or to set up a next move. This is where maybe if you're looking to buy, I would use a feeler buy in here. Just a small little feeler buy, just to test out what's going on there. If not, I'm not in a trade right now. I'm not even using a feeler buy. I'm just waiting it out. I'm going to wait till 8:30 and then see maybe 8:30 will switch momentum. Okay, so now it's still holding, coming up bullish, but still relatively small compared to the big bearish candle that came down. NASDAQ closed above. Okay, so it could be making a move back up. Okay, there's now good volume coming in. Okay, so they're asking to trade up here, but look at that big rejection. Okay, so it came up again. We were not close to 50%. They smacked it back down. Tammy, your plan is to learn chess. Let's learn together. I want to learn so I can beat my son. He's kicking my ass in chess. I might just go to the local park later, Tammy, because I know that there's a lot of old timers with the chess boards out there. I know in London at Victoria Park they got, and those are the OGs of chess. Those guys, they'll hustle me for all my money. They play chess out there on a daily basis. Look at that, okay? So it still wants to come down. So you see how they faked out those buyers, okay? Those initial buyers, they faked them out, slamming them back down, new low. So maybe it needs to come down to that yellow line, 3,300, nice psychological level. Prior to 8:30, a new 30-minute candle opening in the market. And then there's that 200. Oh, okay, so there's the big drop. Wow. Okay, whoa. Holy, okay. So that's a big drop. They even took out that low over here. Wow. Okay. So this could close below this entire green zone. And then I got to flip this big green zone red if that's the case. Holy shit. Okay. So that's a big push down. First 10 minutes of Comex. Wow. Okay. Look at how the daily candle now has lost its point of control. Look at the big rejection wick on and this is the only volume we have left today. Right? Wow. Holy shit. Okay. My goodness. Oh my God. What is going on right now? Whew. So thankfully, like, when I look at this, I'm not in a trade. It'd be nice to be in a sell, but if you're in a buy, that's a huge move. Okay, RSI, do we need to look at RSI? It's at 24 and look at it just dropping. Okay, so you don't need to use RSI to tell us that we're oversold on a move like this. So here's the close in 20 seconds. Okay, again, if we close below here, I'm going to make this big green zone red. Okay, in 10 seconds. Wow, Meeks, you just passed phase 2 with that down push. Congratulations, man. That's a big move. Holy shit. Okay, so there's the close. It did close below. So that green zone, we lost it. Okay, so this could represent now resistance. So if the buyers buy back up, maybe we can look to maybe short in here and bring it down. Okay, and then 9 might be coming down to meet that 200. Could be maybe a bearish crossover. Maybe buyers will come right back up and close it above. So here's 830 now. Look how close we are to the lowest point of the day right here. Okay, so NASDAQ also got rejected coming down. Markets are volatile right now, okay? So I don't mind being on the sidelines, okay? I don't mind being on the sidelines. Just being a spectator, you know? This is better than Netflix right here. Meeks, you're going to the gym now? What are you training today? I got to get back in the gym myself. I'm just recovering from a few injuries from playing a lot of sports in my earlier days and working out a lot. Dave and I used to compete. I was more in physique. Dave was bodybuilding. Used to own a gym years ago. So I love the gym, guys. I can't wait to get back in there. It's like therapy. I got a gym in my garage, a sauna in there. So I turn the sauna on, I train for about 30 minutes, 40 minutes, and then I go relax in a nice hot sauna. I listen to a podcast, and that's my time to just relax in there. I lock the door. I don't want my wife in there. I don't want no kids in there. I just want to be in there alone and just relax. Sonia, the sauna is so nice. Yeah, that's my time out. It's my punishment when I go in there. Solitary confinement in there. Okay, so we had that big drop. Okay. So should we be selling the market right now? I just want to see the response. That was a big drop. I want to see just the response, like the reaction. What's happening here? So it's coming right back in, pullback. Yep, this is a pullback. So should we look to sell the pullbacks? We could, but you see the volatility, so you got to increase your stop loss too. It's difficult to get away with a tight stop loss here unless you nail the trade right away. Okay. Okay, and guys, I have NASDAQ on here just for, you guys, but I'm looking more at gold, guys. I'm more focused on this. Okay, so it retested, continue push down, but it's got a big wick to fill. Okay, so if it was a smaller wick, I definitely maybe would have entertained a sell, but it could just come down and then go back up like what it's doing. So kind of got to be careful. I always look at the size of the wick as well. Okay, the shorter wicks can be filled quickly, and then you could look for that further drop. But this one needs to fill that entire wick and then drop a little bit. And then we're very, very close to that purple low of the day. So this is where, you got to be careful here. Even just measuring the size of that wick that was left behind on the previous candle, it's a 53 pip wick. So this volume has to move down 53 pips and break for a new low. So we're asking for a lot of volume here. But you can see how strong the selling pressure is. Holy shit. And the US dollar hasn't even moved. So this is unusual. Like the US dollar is sitting at 99.65 cents. Hasn't really moved. So was there any news that was released right now? Let's just take a look quickly at maybe the news. Like around, no big news. So you see today's daily candle, we basically gold lost all of its bullish momentum and pushing down. So that's all we have left of bullish delta volume in today's daily candle. Okay, so you see how it came down, but it is technically like a higher low right there. So it is building. We got an ignited bullish candle, the way how it opened. And as soon as it opened, it retested kind of 50% of that previous bar, and right away they pushed it down again. Okay, so it's still bearish. You know, like let's see if it will continue to build. Even to look for buys, I like to see buyers, blue volume close above this yellow daily point of interest. And then like right down here, I just want to see if it will build just a little bit of support. Maybe like we're trying to physically find where the bottom is, if there is a bottom. Okay, so that came up bullish, bullish, bullish again. And then look at, they slammed it down. Oh my goodness. Like, and the dollar is not even moving. So what is causing this? Sonia, are you watching Bloomberg? Do you see anything on there? No? Yeah, I don't see any news causing this. Notice that they did not break out that low. Okay, so that's important technically. You know, when we're just looking at candle by candle, it didn't break that low. Okay, so let's see if it maybe builds off of this or it is a tweezer bottom low. But I'd like to see volume close in order to go bullish. The buyer's got to prove to me that they can close above this yellow line. Otherwise, it might just come back up. Sellers are going to continue pushing it down. So I'm not ready to even look for any buys yet because sellers could definitely continue to push this down. And then we're at the lowest point of the day. So are they targeting the low of the day, that liquidity down there? Remember what I always do, guys? I use this as to represent liquidity in the market. So there's a lot of liquidity right there. All of the daily buyers, maybe at the opening, their stops are below there. So will the market come down there and then go back up, or that's it? That's the lowest point so far, okay, which it is. So now you see we got a spin top indecision. Buyers are buying, sellers are selling. It's building a little bit, but still no direction. Or we could wait to sell a pullback. Like, you know, you don't always have to go in a buy because a buy might just be one leg coming up and then they might slam it back down. Okay, so if you are looking for buys, remember right now, like prior to taking the trade, you are counter trading. You're counter trading that heavy sell. Okay, so it could come up, but you might be coming into supply and then they push it back down. So this is the first actual bottom now of structure that's been established. Okay, so now we got a nice bullish candle that's closing in 1 minute and 10 seconds. Let's see, can it create a new high above that previous candle's high just to build a new higher high, right? Because in order to build something, you got to either have higher lows or tweezer bottom lows, and then you got to complement it with a higher high. Wow, okay. Okay, so remember, a second bottom is much more powerful than just a single bottom. So that right there, we're starting to see the establishment of a single bottom coming back up. Okay, where will it come up to? Will sellers push it back down? Will it be a higher low? Will it be a double bottom? Or it's just going to continue breaking, okay? So, you know, there's nothing wrong with staying out of the market, still analyzing, doing your technicals, while you're figuring everything out, NASDAQ came up, pushed down, big bearish ignited candle push and closed below. So you see kind of the retest still. If you get your cut line, still, you know, keeping it 50% right there, still below. Okay, so it did make a higher high and close. So if it pulls back, look at the yellow line. That's where maybe I could entertain a buy if it pulls back to that yellow line. Okay, so it got rejected right there. This is the 200 EMA. That daily point of interest yellow line now is resistance and our 9 EMA. So it could definitely be coming down and creating a bearish crossover and start that next leg pushing back down. Okay, so now it is coming down. Will it come down to that yellow line right there and build off of it? Or will it continue to be a bearish candle coming all the way down? Okay, so let's just watch this. And I cannot believe that the US dollar hasn't even moved. I thought maybe my other screen froze, but the US dollar has not moved. It's sitting at 99.68 and it's just been consolidating there for like the last 20 minutes. So this is an unusual move. And there was no news to released. So there's the retest. Okay, so you see how it retested the yellow line, 50% holding support. So now if the candle flips, it might have enough volume to maybe fill this red zone and then at least fill back up to there. Okay. So, but still kind of, you know, maybe it's discovering its neckline where it's kind of consolidating right here. Okay. Okay, so we got an inside consolidating candle, maybe at its neckline in here, still showing some signs of bearish volume. So our first retest of that yellow daily point of interest held. Okay, so maybe we're going to get a push on maybe the daily volume pushing up. Okay, I'm going to go in a buy here. Okay, and I'm going to place my stop loss below those tweezer bottom lows at the protected bottom, and I'm going to see if we can maybe push through this red zone even with a pullback to allow it to build a little bit. So I'm going a smaller size to allow it room to breathe, and then I want to see if it can maybe push through the red zone, take out that high and travel up to 50% of that candle. Okay, so I'm testing out a buy. I know it might be early, but I want to see if it can build a little bit of this daily volume that's still left in the candle and see if it can build through here. I know I'm kind of counter trading this bearish move, but I want to see if it can build a little bit and just, you know, recover a little bit of this bearish if the buyers can reclaim position. This is where it will really, really reclaim who's going to be taking over today's momentum. Okay, so but I'm going to test it out. Okay, so what I'm looking for is, again, and if it starts going up, I'm going to reduce my risk. I want to clear this zone. So just coming through the red box would be about 45 pips. If it can fill to the prior wick, we're looking about 50 to 60 pips up there. And then that's, if it can continue to move through here, I'll be slowly reducing my risk in the trade. Okay, so I just want to see if it can build in here. I know I took a buy on the first leg coming up, but maybe the neckline might be somewhere around here. Still holding that point of interest right here, the yellow line, with 1 minute to go. So it'd be nice if this candle can close near the high. then it's got maybe a head start to just break that 3,300, that psychological area right there, and maybe have that extra little push. Okay, so it closed right there, ignited open. Okay, so hopefully don't lose that ignited open. Still holding, but it's right kind of in that supply area. Okay, so we lost the ignited open, but if it retests 50% of the candle right there where my cursor is, can it hold 50% and build off of that volume that we had in the previous candle? No, it didn't hold there, so they broke the low, but good spike back up. So let's see maybe if it can build. If it comes down, I still want to see the supporting line right here, this yellow point of interest. Okay, so maybe the neckline is right around here, right at that 200 EMA. Okay, so I want to see if this daily volume, see the daily volume bar right here, if it can continue to just build. Okay. I'm kind of getting in a trade, not hoping, but kind of anticipating that the daily candle is not going to lose its volume. Okay, it can build right back up here and reclaim this area. Okay, but this is the battle zone. This is where the battle is happening between the buyers and sellers, right in here. It could dictate the direction of gold today. So that was a good pullback, still healthy pullback, higher low. We're right back to where we opened. So now can we push with that volume back? And I'd like to see if the buyers, what they can do here at that yellow line, exactly at 3,300. It's a nice psychological number, and whoever takes over this position can control this move. So as it came up, sellers are pushing it back down, buyers are buying it up. See the daily candle, it's building, but this is that big zone it's got to cut through. Okay, remember the up here, the yellow line. Okay, so it's building, good hammer candle. We got good volume. Okay. Whoops. Okay, to the yellow line right there. Okay, so it's just 20 pips. Okay, but if we can get that push above there, and if we get follow through with volume closing, so we still have half the candle to go. 2.5 minutes. Okay, so it's about 20 pips right now. But this is where the real fireworks are going to happen. Who can, so far the sellers are maintaining that yellow resistance, pushing it down. Buyers are bringing it back up. They're asking to trade back up here. I want to see who can reclaim 3,300 here. All of this is happening while the US dollar is not even moving. That's unusual. I haven't seen that in a long time. Okay, so here we go. 90 seconds to go into the close. We've got a good bullish candle building. We got higher lows, we got higher highs. But we'd like to see the volume closing above here. Or just simply consolidating around here. Do you guys like this daily candle tool indicator right beside us? Yeah, Armandi? I never used it before. To tell you the truth, I never used it before. At least remind me at the end of the call. I'll show you which indicator it is. Okay. Okay, so it's not surprising to me that it got rejected at that yellow line. Okay, but it's how the candle follows through. It's how the candle closes. I like how they spiked above it. Okay, they created a high there. 10 seconds to go, so it's filling back up. I would love if this candle can close near the high, then maybe get an ignited open and just continue. And then that's where I could start to reduce my risk in the trade. But so it didn't close above it, okay? Closed relatively close to it. The candle opened like a doji. Did you just see it? So if we can continue to build out of here and maybe just to test that 9 EMA, could be about 30 pips up there. If we can continue, but this is going to be the big, this could be where the neckline is, okay? But I'm just looking for that continue push, and then I'm going to reduce my risk a little bit. Because the second leg hasn't really came down yet, okay? So we're still building, but the neckline could be somewhere like around here if this is not going to be it here. So if the buyers can break through here, our daily candle could continue to get strong and fill up here. But we still haven't had that second leg pullback yet. Not really. Every pullback has been higher lows, so we're looking good. Yeah, there we go. Okay, good push there. Okay, so 30 pips up there. This is where I'm reducing. Okay, break even time now. You know what I'm going to do? I'm going to do something different that I'm going to leave my stop loss just below that wick. Okay, so it's not technically a break even, giving it some room to breathe. So 10 pips. I'll see if we can break here. But so I've got it. I've reduced my stop loss from all the way down there to I have a stop loss of 10 pips. Okay, just that's a substantial reduction. That's okay. Now I'm going to break even. I got that push that I wanted. Now I'm at break even. Okay, so there we go. 40 pips up there. Okay, I'm going to scale out 80% of this, approximately 40 pips. I'm taking out 80% because it's still within that red zone and they could bring it down. So I want to take out the bulk of the trade here, 80%, and I'm going to leave 20% running. Okay, so we should all be at least at a break even. Some of you guys, if you want to take out, I took out because it still could come down with that second leg. So I don't want to piss away 40 pips. Okay, so I took out 80. I got now 20% running with break even. Okay, so do you guys understand why I took that trade? The tweezer bottom lows, okay, and then we had that nice bullish candle close, kind of a retest. I was following it, and then I bought in here. I had a big stop loss below those, but that's how the structure was built, right? I could have placed my stop loss below those bodies, but what happens if it came down, tapped me out, then started that second leg up? So pip and dip, crazy. You got it. Yep, that's a pip and dip. It's a counter trade too, so that's why I secured. Okay, I'm going against the trend, right? So I'm counter trading. So I'm okay with that, you know, because I know it could come right up here and then they slam it right back down. Okay, and if it continues to go, that's why I got 20% runner, taking care of, you know, that psychology in my head. I should have done that. I would have done that. I could have done that. But when you're counter trading, you know, sometimes you got to accept 20, 30, 40 pips and just be good with it because we're still trading in this red zone. You know, it's a red zone for a reason. The sellers can absorb this and what they're doing right now and push this thing back down. Okay. And we got NASDAQ still just consolidating here going into 9 a.m. 9:05, guys, I will go and we'll do US 30 and then we'll get ready for Wall Street because I need to take a break too. I've had 2 coffees, so I just got to go quickly to the washroom just right around 9:15. Okay, guys on YouTube, if you guys can leave us a like, if you understood the analysis, the breakdown, we appreciate you guys. There's 235 viewers. If you guys can give us a like, maybe we'll have 300, 400 viewers on here eventually. We appreciate you guys. Thank you guys, you know. Everyone on Zoom okay? What did you guys do? What was your risk management plan? Let me ask you guys, okay? I don't want you guys just to trade like me. I want you guys to have your own plan. And you guys learn that way. So what did you guys do? Are you guys still holding it? Are you guys at a break even? Did you guys scale out? Everyone has to have your own individual trading plan, okay? Samuel, you entered later but got 50%. Share, you scaled out. Nigel took 75% out, left the rest. Lisa holding small lot with break even. Okay, guys, look at what we got now. Now into the close. Wow. Good candle. Look at where it might close. Right, like, look at where we are, right at the top of the red box. Okay, so get your cut line. Okay, cut it right there. So we're cutting it right at the 9 EMA. And look at our bullish daily candle. You know, so if it continues to drive, where could it go? Remember, 50% of that big bearish move that started at Comex. Where's half of it? Right there. Okay. So we're filling the prior. Ooh, did it fill the prior wick or is it tweezer top high? It got right up to that wick. Okay, right there. So that was approximately 60 pip move right up exactly to that prior wick. So we do got now tweezer top highs. So that's it. They shut the move down. And now it's coming down as a shooting star, possibly to retest 50% right here or your 9 EMA. Okay. Okay, so we got a higher low. Now, we don't have any volume closing above here yet, because if we close blue above here, then this big red zone, we're momentarily going to flip it green. Okay. You want to find a short? I would, if you're looking to short it, I would maybe short it below this yellow line. Okay, because then sellers can regain control of that point of interest on the daily and then maybe bring it down for that next leg. That's where, if I was looking to short gold, I would be looking to short it below 3,300. And we're going into 9 a.m. in about 3 minutes, guys. Okay, so hourly momentum. You guys have seen, just as you guys are here every day with me too. So you see when a new hourly candle opens, sometimes it completely changes momentum and sometimes it will come down again at 9 a.m. So we'll see how everything works out here. That's why runners take care of that, you know. That's why when I look back, I'm happy that I exited with 80% because exactly what I was saying. I took a counter trade. I can't anticipate that this is just going to continue to drive because it dropped down for a reason. So we kind of made up a nice pullback, but that's the single leg where it came down, kind of recovered. So that's what I was talking about. The second leg might come down. Shepo, sometimes you feel like you can blow that wick. Yeah, I saw a TikTok clip where the guy was blowing on his screen to push it up. It was pretty funny. If I knew how to make TikTok reels, I could make some funny stuff too, but I don't have the time and I don't know how to do it. I would love if someone can teach me how to do reels. I'm terrible with social shit. I'm like my dad. Shepo, you only need $60 to pass your account. Please take your time. Please take your time. If we do $1 per day for the next 60 days, take your time. Shepo, please, please. This is where I see a lot of traders. They're right at the finish line and then they over leverage and then they go and draw down and they, please, Shepo, listen to what I'm saying. Just reduce your risk. If it takes you 1 week to get that $60, at least you will pass. Because I've seen 9 out of 10 traders get to this point where you're at and they leverage a little bit too much and then they go into drawdown and then they revenge trade and then they're mad and then they're messaging Dave and I and say, Ron, I just blew up my account. So please listen. I've had this conversation with hundreds of traders and just take your time. Okay, you don't need to finish this in an hour. You don't need to finish it today. Just take your time, please, please, please. I can't tell you how much like traders get affected by that. Right when they're at the finish line, then they do something silly and then they end up regretting it. So just take your time with it. Let the trades come to you. This is where you got to exercise extreme discipline and patience now. Okay, so here's the close, guys. So we came down. Look at what we retested. That yellow point of interest, 3,300. Buyers are still holding it. So they're bringing it right back up. Look at it. It's going to close right at our red zone. So they opened it, bullish ignited. Okay, beautiful. Now it's filling. Let's see. Can we break those two tweezer top highs? Okay, fill, fill, fill. If it fails to fill, then it will come back down. Okay. Come on, we got 20% running in here. Let's go. If we can get up to 50% of that candle, it's approximately 75 pips. The cycle of doom, Yeah. Okay, there we go, guys. So I got 20% running. I'm going to take out 10% and leave 10% running, okay? Because we're going to get into doing US 30. So I just want to reduce my risk and take some more profit out of the market. So I'm grabbing another 10%. Remember, I got 20% running. I'm just taking out another 10% at 70 pips. And I got 10% running. I hope it goes all day. And that is with a break even, okay? So, wow, there we go. So right up to 50% of that candle. That's target. You know, that was the target of the trade. That's why I gave it a little bit more room to breathe. That was the target there. So mission accomplished. That's the trade, right? From point A to point B. If it goes more, that's fantastic. That's like bonus. That's why I got 10% for that. But you know, and then someone will say, well, Ron, why didn't you hold the entire trade? Because I'm telling you, a million times I've traded where I didn't take out anything and then it came right back down and hit my break. So I don't trade like that, guys. I don't switch up my plan and worry about the hypotheticals and things like that. For the life of me, that's what ruined me as a trader. And I had no plan every single day. Then I was just, should I hold today? I was just guessing. I feel more confident trading from here to there and accepting profit. That's trading, guys. Don't overcomplicate this. I think I like this daily candle tool right over here. So we see how it held. The buyers reclaimed this red zone, but we still don't have a 5-minute body closing above to make it green yet. And guys, how much drawdown did we encounter? Not much. Not much drawdown. Okay, if we look at the drawdown total, you know when everyone is always concerned about R&R, okay? Unrealized R&R, but 11 pips of drawdown, and we got a 75 pip return. So a 1 to 6, a 1 to 7 on your money, that's a pretty good, and this was a scalp, mind you, okay? So, but it's just being patient, guys. You know, like I didn't jump all over that I could have sold, right? We could have, yes, but I didn't feel confident just trading. I didn't even know why it was dropping. Remember, I looked at news. The US dollar, I said, was not moving. So that kind of raised alarm bells for me. Like, what's going on here? So I let it bottom out. And then I saw how it traded at the bottom. I saw those two tweezer bottom lows. That was the clue. And came back. We got a nice bullish engulfing candle. Engulf that. The nice pullback. Where to the yellow line. That's why I have a yellow line there for a reason. It was a daily point of interest. And look at how it came up. And then right there, that's when I bought. That was the little bit of drawdown just on that previous trade. I didn't even need to go with a long stop loss all the way. I could have gone below those bodies. I could have gone below that low. But I was allowing this thing room to breathe, to develop. But great, guys. I hope everyone learned something on that. If you earned something, that's even a bonus. But let's move on to US 30, guys, because it's 9:05. I want to get that chart done, and then I need to just take a quick little break, and then we'll continue moving on. So can you guys please manage this on your own? Just a recap, I've got 10% running from right here at 32.98 where I bought in with a break even, okay? So I'll let that now, like My psychology is not in the trade anymore. I'm not worried about it. I can now move on. Okay, so let's continue to move on, guys. We're gonna do now US 30 and get ready for market open with all three of these securities. Okay, so it did close above. One thing is red to green, because now pullbacks could be actually building here. Okay, so I know there's a lot of green here, the big green daily candle over here, but you know, next target for continuing to hold is that white line. That's that hour. That would be 100 pips up to that hourly white line right there. Okay, so if it can get up there, that would be another big target, and basically recover all of that Comex drop. Will it retrace 100%, or are they still going to push it down? So you see how we're still struggling with 50% of that first Comex candle right there. It's still holding down. Now when it comes down, now it's trading into a green delta demand zone, no longer red. So there might be now more buyers piling in here, and it could be gaining strength on this daily candle again, building. Okay, let's move over to US 30, Ms. Jones. Okay, so we're going to leave gold over here to the left. NASDAQ is right here in the middle, still in that hourly consolidated range. Okay, still building in there. Probably Wall Street is going to be the bigger move. And let's take a look, do our analysis on US 30. Okay, so everyone refocused. Let's now do a little analysis on US 30. I'll try and get this done in less than 10 minutes, and then we can go to the, take a quick little break, and then we come right back for Wall Street. So starting on the daily. Okay, so here's the daily. We've been seeing the same thing over and over and over. The daily candles are not going to change. So you got your double top all-time high supply. We saw it on NASDAQ. There it is on Dow, 45,000 right there. Are we close to it? We're struggling with this resistance right here. I can see in the market. Okay, where's our, right there was a nice bottom pivot held. Okay, so that's why stretching these zones in the future helps so much. When I started doing this, I'm like, wow, makes so much sense now. Okay, right there where it closed below it would be red, but I'm just trying to do this a little quicker so I can see where it closed above the pullback again, right in that green box. It pushed up, but now we might be coming right back in this green box today, and we'll see what type of response we get out of this. Okay, do I need to start doing everything below here? It's excessive. I don't need to. You guys know, if you want to go through and do a proper, thorough analysis, you can. You can start like how we did NASDAQ, but I don't want to take too much time. I don't think US 30 is going to drop all the way down 35,000 today. So, but this right here, this pivot point where it dropped, where it broke the zone and it came right back up, that's important, because what if in the next couple of days we do break our green zone? We want to know where the previous support was when it did break, right here at 40,820. So I'm not saying it's going to come down there today, but that's a good area to recognize down in there, okay? If you want to get a little bit more technical now, this is where you zoom in, and then there I see a resistance, turn to support like right around here. Can I place another point of interest line here? Let's go with maybe right here. So I'm trying to line up everything with over here. Here it closed, there open, retest, break, body above. There's where it closed. Below, so it's resistance. There's resistance, impulse break to the red box, back down, close. Now we got that big bullish candle. So you can see if we do break the green box, maybe right there, 43,390, they pick it back up, okay? Now, always, like inside a green zone, if you want to just acknowledge where 50% is, gold was an example. Remember that point of interest, 3,300 on gold? It was right there, right in the middle. But this is now, we're doing it for NASDAQ, 41,900. Okay, so those are points of interest. Everyone says, Ron, what are these yellow lines? That's exactly what those yellow lines are. I can have another one right now. Where? Right here. Why here? Because just look, the candles tell you a story. It's a story right here. There's where it broke, volume above. Broke, volume above. Volume closed at the yellow line. Volume pushed down, closed above there. And then you see where it's black below there. Now it's resistance. Look at the retest. That big bullish day, retested that yellow line, back down. Now we closed above it here. And if we come back up, that could be a point of interest, 42,600. Can I draw like a red zone now above me? Yes, I can. Now, if you use that yellow line as interest, look at those bodies. I can come, we'll make it red now, okay? And then you can see how that candles, how they came in it and rejected down. If I continue with this, then I see maybe was Monday this week and Tuesday a fake out in the market? Did they fake out the market and now they're dropping it back down? So buyers need to reclaim that position, but it's showing that they cannot break up there. So they're struggling up there. So now we're just trading in this zone here. Again, there'll be a better reaction when the volume comes to the red zone or the green zone, okay? Now let's just, if we do break above here, where could we go? Look for your points of interest right there. I know, I don't know if we're going to get up here today, but I'm just saying, if you want points of interest, like you could even go right there. I would say right there. Holy shit, look at the number. 42,999.67 cents. It's like we're shopping at Walmart, okay? But if you want to go with the nice psychological number, 43,000 on the dot. And then it kind of represents 50% of that big bullish candle. It turned to resistance. So if you do get an impulse break right there, okay, but we don't have to worry about that right now because we got a big bearish candle. So now let's follow the volume from yesterday and today. This is where we zoom in. So yesterday, okay, we opened, was bullish. So it did create a weekly high, but then got rejected, came down, and closed inside here. Today, here's the opening. Look at point of interest, close, open, just a tiny green volume. And there's the high of the day, right there. Purple line. You can see sellers were in full control right from the open. They slammed it down. Then it was bearish, bearish, bearish. There's yesterday's low. Let's place a point of interest, yellow line right there, at yesterday's low. And what happened there? They continued to break it down, push it down, push it down, push it down. Here's another important point of interest. There's a body to body right there. Let's place a yellow line there. And look at now what's going on. Look at the lowest point of today, okay? Purple line at the low of the day. And you see how it's lined up with previous daily lows? Right here on Monday, right here on Friday. So that was where the buyers came in on Friday. That's where the buyers came in on Monday, and that's our low today where the buyers came in. But look at this heavy selling candle coming down. So they could easily, Wall Street market, break this and drop. Where could we look for? Top of the green box, 42,140. I normally use the top of the green box as a point of interest, but I just want to make you guys look. If we place a yellow line there, that's a point of interest, okay? I normally don't do this because it's excessive, but if I'm measuring, I'm measuring to the top of the green box. It's a point of interest right there. So it's about 100 pip drop. If they create a new daily low today and it drops 100 pips, we could scalp down there and grab 100 pips, but we have to acknowledge if it taps this green box, it might get a wick and go back up. If it continues to break, if it's bearish, 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 bearish coming in here, there it is. Those two bodies, there's your other point of interest right at the bodies, right there. You see what I'm saying, guys? How you can set your trading up like a grid system, okay? And then now naturally, you know what I always do is look for where's 50% of this volume, and remember, it's moving. So I grab the Ronny tool, and I bring it from where it opened to where it closed. There's 0.5. You see how close it is to yesterday's low? If I want, I can bring it, just manipulate it myself, bring it down there, and then don't forget your zone, right? A little bit above, a little bit below. Then I got yesterday's wick. It's bearish, so it's representing bearish volume. Let's stretch it into the future because that's what buyers are going against. There's the point of control, and the sellers are in control today. So even if the buyers bring it all the way back up and get in the red zone, sellers could easily come in and push it right back down. Same with the opposite with the gold. Remember, it came down and we bought the point of control for the daily, and we got that good bullish push coming out of there. So this could be the same opposite, but we got to acknowledge that, okay? So you see, now we're attacking that low of the day. Maybe they might break it prior to Wall Street, but we got points of interest below us. Now what I do is I look at the overall pattern, okay? So, you know, it was very bullish coming back up. There was that double bottom break come up, but we're struggling to break this neckline right here. So everyone's talking, is it going to go to all-time high? We're not even considering all-time high. We can't even break right here. So they're putting a lot of offers in the market and they're holding the market down. But we'll see what type of reaction we get in this green zone today. Okay, so it's very bearish on the daily. Excuse me. And we're now going into the 1 hour candles. So look at the 1 hour candles. Look at them. Just lower lows, lower highs. Okay, so it all started up here, lower lows, lower highs, lower lows, lower highs, pushing all the way down again, close below that wick. A little consolidation where that point of interest right there, and then they continue pushing down. London, 3 a.m., 4 a.m., 5 a.m. is when we made our daily bottom, or sorry, 6 a.m. this morning. And look at now that purple line right there. Monday, 5 a.m. was a low. Look at how many times this has been a very important area, okay? So it's going to be very interesting to see what happens down here. And sellers are still pushing it down. Now, hourly points of interest. See, the yellow are daily points. Now, an hourly point right here. Same thing. Remember, all candlesticks have the same characteristics. Why are we not putting points of interest on the hourly? Right there. There was a body that closed. There was a body that opened. So for buyers to get it back up here on the hourly, to prove to me that they're strong today, I want to see an hourly blue candle close above here, maybe retest that white line so it's got enough momentum to break that daily resistance and maybe drive up to here, okay? If not, sellers are in full control, right? So what we could also look at is when this daily candle closes in 43 minutes, where will it close? Where's 50% of it? But right now it's dropping, so very bearish. Now, below this purple line, you see how I have nothing? That was that 100 pip measured move coming down there. There's got to be some time where some hourly candles traded below this purple line, and here it is, okay? See how we can do some magic over here? Now I see the structure of the hourly, and look at the point of interest on the hourly. How is this not an area of interest right here, okay? So you see where it came down, back up, came down, back up, came down, back up, came down, back up. This big bearish bar closed below. Now when it's coming back up, it's using the white line as resistance. Back down, coming back up, back down. Look how many impulse moves there was there. There for 3 hours. And they kept the volume below 42,200 and continue to push it down. Now we closed above it right here. So it uses the white line as support and support. So if we break today, you know, yes, it's 100 pips to come all the way down there, but maybe the buyers are waiting right here. So what I do is a little bit above, a little bit below, kind of just to give me a heads up that if it comes in here, that's where they could hold it from further breaking down right there, okay? So 42,200, I'll place an alert in there too if I need. If I walk away from the computer, for example, maybe I'll get an alert if it comes down there. So look at this big, heavy daily hourly candle coming down. So look at what it's doing. It could be filling all of this and further drop. Okay. And then why did I do a little bit above, a little bit below? Now go backwards and you can kind of back test yourself and look at right there. See the bodies and the wicks. So stretch that into the future and let's get ready for it. So very bearish on the hourly. Let's go into the 5 minutes. And this is what we got. So it was a beautiful bottom, good, nice counter buy, similar like what I did with gold, but I took money out because it's coming back up and then going right back down. So even those buyers right there, had they not done anything, 100 pips, you just kind of gave it right back to the market, okay? So on the 5 minutes, look at every time they're coming down here, they're building a little bit of structure right there to the bodies. Right there. That's the 5 minute supporting area. Coming down, going back up. Coming down, going back up. Coming down, going back up. Not breaking that low of the day. So stretch it into the future. This is now representing the second bottom. It's coming in here. So are they going to, what's below here? What's that fancy word? Liquidity. Are they going to come and grab it and go back up? Or are they going to grab it and it's going to close below there and then there's more liquidity sitting down there and they want it. So first thing is, are they going to grab this liquidity below the low of the day? Is it going to build and we're going to come right back up for a nice second bottom? There's our neckline right below the big supply zone. Okay. So, and then there's our white line for hourly points of interest and in that daily area. Okay. So that's what, let's add some EMAs like we normally are doing here. 9 EMA. We're below the 9, so it's clearly bearish. The 200 is all the way up here. We're below it, clearly bearish. Okay, so we'll bring all three of these charts together now. Okay, so we got US 30 over here on the right side. About 10 minutes away from Wall Street, and we might be breaking the low of the day prior to Wall Street or during Wall Street. We'll see. Or maybe Wall Street will be a big bullish move coming back up. But again, let's look for clues. You don't have to trade right away. You can wait 5, 10, 15, 20 minutes, 30 minutes. If you're speculating, remember the game of chess. You move a pawn. We use a feeler trade to test things out, unless you have full conviction on your analysis. Okay, and we see similar. Look at NASDAQ, lower low, lower high. They pinned it right there. There's that ugly pin candle, and then open bearish ignited, continue push new low, come back up 50% right there where we put that red line, and continue to drop it down. Okay, so that's why I put that red line right there, to see if they'll hold a higher low. Okay, so I'll get rid of these because we're going to get ready for a new volume coming up. And gold is still building. Okay, so gold came back. Look, it came back in multiple times. See, that's why sometimes when you have good areas and you know what you're doing, you can walk away knowing and trust your analysis. It came down right to that yellow line, daily point of control, 3,300, and continued to build. And the daily candle is still building. So I got that 10% running for almost 100 pips. Guys, I need to go to the bathroom real quick and just grab another drink. I will come back. I know it's 9:21. I will be back in 4 minutes at 9:25, and we'll get ready for Wall Street. Okay, so one quick washroom break, guys, and a drink. I'll be right back. Okay, guys, we are back. I told you, less than 4 minutes. See, I'm a 1 minute scalper, so I know all about the 1 minutes. My nickname in high school used to be the Minuteman. That's got pros and cons with that nickname. It's not the greatest nickname, guys, to have. But we got an energy drink, and we're ready to go. Trading 1 minute candles. Trading 1 minute candles. You guys got dirty minds here. Okay, so let's all refocus now. Take a deep breath. We're 5 minutes away from Wall Street. Okay, they're breaking. US 30 is breaking its low, And Alex, but hey, in high school I was known to scalp 1 minute candles, so I got the nickname the 1 minute man. It's not, like I said, it's not the greatest nickname to have, but if you understand trading, then, but people that don't understand trading, they're like, oh, why did he get that nickname? Okay, so when Wall Street opens, I will have more focus on NASDAQ and US 30, but gold, we got a break even 10% running, okay? So what just happened? Okay, so US 30 just broke its low of the day. So we'll see if it builds going into Wall Street. NASDAQ, completely different security, but the low of the day has already been established. Let's just take a look at the pre-market right now, what's going on our big names that we're familiar with. Target, holy shit, is down 7%. Wow. $91 a share. Oh my goodness. Like Target is getting beat up over here. Last 6 months, it's down 20%. Holy shit. Wow. Okay, so Target is getting beat up. They had earnings today. Wasn't the greatest earnings, wasn't the greatest guidance. They're taking a beating right now. But let's look at the bigger names. Nvidia is down 1%, which is nothing. Meta is down 1%. Microsoft is down 1%. Google's flat. Amazon is down 1%. Tesla is up 0.25%. Apple's down 0.5%. So flat market right now, but I do see some red in the pre-market. So I always see a little bit of selling pressure. Let's just take a look at United Health. United Health is down 6%. Okay, so just keep those in mind. That will change as the market opens, but that's all pre-market. Okay. No, Mark, it wasn't. Okay, so what's everyone going to focus on for Wall Street market open? 9:27, 3 minutes away. First thing I'm focusing on is I was just trading gold, so I got to go back now, switch to either if I trade US 30 or NASDAQ, again, looking at spreads, changing sizing, right? Are you going to speculate when the market opens, something small, or are you going all in? Like, what will you be doing? Make sure right now we don't make any mental mistakes, okay? I always, not just to remind you guys, but I got to remind myself because I've been known to do some silly mistakes myself. So right now is where we prevent that, and now have a plan. Are you going to be trading the first 1 minute of market open? Are you going to wait 5 minutes? Some traders here wait 15 minutes till 9:45. Some wait till the dust settles till 10 and then start looking for trades. So this is where you got to kind of anticipate what you're going to do. It's hard to just guess every morning that you're going to do this, you're going to do that, okay? But right now US 30 is building, so it broke the low of the day. It does have tweezer bottom lows, like right there. Those last two lows now, they're equal, 42,225. Got a nice big bullish candle, but could this be a fake out prior to the market opening up? And maybe like a lot of buyers are buying right now, and then as soon as the market opens, then they slam them back down. So that's what we got to watch for. But what I watch for is if it does come down, what is the reaction at 50%? Does it pick up a wick? Does it continue to go? Where does it close? All of these things I factor in. Okay, and got some indecision on NASDAQ over here. Just going to clean up my charts now, get rid of some lines that are irrelevant here. I'm still going to keep this consolidated zone here because that's where most of the volume is kind of concentrated. We had that break, but we're below it now. Okay. Gold, again, look at gold. How many times did it come down to that yellow line? 1 time, 2 times, 3 times, 4 times, and it's holding that 3,300. Why? Because it's an important daily point of interest. So as a scalper, you can take multiple scalps off of that line. Like 1 minute traders, the 1 minute men. Who else is a 1 minute man in here? Now you can. Now I'm calling you guys out. Who are the 1 minute? I'm talking trading. Where are the 1 minute traders at? Mark, it's you. So I'm not the only one. Okay, so here we go. 10 seconds, market open. Please, guys, trade with proper risk management. Don't do anything silly. Don't over leverage, please. This is where volatility comes in, okay? So it opened bullish. It didn't take out the high yet, okay? So will it retrace back? Again, this is the first 10 seconds, okay? Gold opened bullish, ignited. So let's see if we get that push on gold to break that hourly point of interest, then possibly coming up to right there, to all of those wicks right there. And that would be, if I got runners, maybe you guys are holding more. That could be approximately 130 pips for gold up there. But good push, okay? So on NASDAQ and US 30, good push. First few minutes, okay? But remember, let's wait for the body to close. So look at what it just tested, our hourly white line, and it got rejected down. Will it retain its body of volume, or is it going to come all the way back down to retest? So as it came down, continue to fill. Now it's going to possibly break, okay? NASDAQ is looking good too. Okay, so good bottom. Yeah, US 30 is already nuts. Okay, so I'm waiting 5 minutes, okay? So just so you guys know, I'm not going to be trading until a 5-minute candle closes. Very good bullish move coming from NASDAQ. Same with US 30. So kind of established the second bottom where they broke the low of the day, but they grabbed the liquidity. So beautiful liquidity sweep. I might be looking to buy a pullback if it comes down. I want to just see how high it goes, where it goes. Will they close it above that daily point of interest up there? Will it get rejected? Okay, so market is very, very bullish right now. Excellent, okay? First 2 minutes, remember that, okay? What is my yellow line? It's a daily point of interest. Holy, okay. Good push. Wow, wow, wow. Okay, but also, guys, let's learn from this because this is not going to be the first and last Wall Street market open we do. So look at US 30, what they did. 5-10 minutes prior to Wall Street, they took out the low of the day, they grabbed the liquidity. So pay attention to this pattern because you might see this more often than not, okay? So then you might now recognize this and maybe then you can get ready to buy. So recognize what they did there prior, how they engineered that move to Wall Street market open. There was a reason why they came down there and why they did that, okay? So that's part of trading, is not always being in a trade, but it's learning. It's paying attention to what they do and then memorize that or write it down because maybe next week you're going to see something very similar. And then now you're going to know how to trade it or what the results were. So that's how I learn. I learn by recognizing what they do prior to market opens, and then I learn from it, okay? So also, if you're a seller on that leg down, you should have been securing some profit down there as well, you know? And let's go with gold. Hopefully we can close above that hourly position, 3308, and maybe gold can continue to push. Okay, so we have 1 more minute. Holy shit, NASDAQ came all the way back up. That's that 200 EMA, that red zone where they rejected it back down. Okay, so when this candle body closes on both of these, let's determine where 50% is. And maybe we could get maybe a possible pullback buy. Or it could be a fake out. Okay, so they took out that daily point of interest. Now it's coming down into the close. So how much of this bullish volume are we going to retain? Okay, because that's a big rejection as well. Samuel, you close gold. Nice one. So probably 100 plus pips. Okay, so there's the close. Now, quickly, like looking at 50% of NASDAQ right there. If I'm looking at 50% of, look at right there, it's at that white line. So I don't even need to put a cut line there on US 30 because I can utilize the white line. It looks like it's exactly 50% right there. Okay, so if it comes down, will it get a wick? Will it respect this area? Will it go back up, or are sellers going to break it? So it got a good wick there. Wow. Okay, so good wick. Now will it break and then have enough momentum to continue to fill this wick and continue driving? Okay, so first attempt was respected at that white line. Okay, so let's see if they can flip the candle. Still holding some bearish volume. Has not flipped as of yet. Okay, still bearish, still building. Okay, so NASDAQ is pushing. Will it fill? Remember, if it was a shorter wick, what we always talk about, then it would have been a nice imbalance fill and continue drive. So it's got to fill that entire wick and continue to drive, and then it might lose momentum, and then you got the 200 EMA in that red box. So you see how it came up and didn't hold. Now it's coming all the way back down. So, you know, I'm still sidelined on US 30, just still watching here. Okay, so they're bringing it back down. How far down? Let's find out. Okay, even if we're waiting 5 minutes, 10 minutes, it's still okay, guys. You know, like you don't got to jump in right away. Okay. Okay, so we had a nice big bullish move opening, and then look at they're retracing it back down with a big rejection, coming all the way back down. The NASDAQ is struggling to fill the prior wick. Okay, and gold. So the market is kind of pushing down. Let's see what happens here. Okay, so this is where I always say, if you were attempting to buy the open of this candle, then like look at how much drawdown you saved yourself. And if you're looking to buy up there, imagine now buying where, okay, you would have been in 50 pips of drawdown, 60 as I'm doing this, maybe 70. So like if you want to buy, why don't you just consider buying the low now? Like, and then you would have saved all of that on drawdown where you can place a stronger stop loss down at the daily area if you were considering a buy. So that's what I always say. Instead of just buying the high, why don't you just wait a little bit and maybe you'll get a discount, which you could get there, okay? But now it came down and now it's coming right back up. So 2 more minutes to go. I'm going to wait to see where and how this candle closes. Same with NASDAQ, gold, okay? It hit that daily, or sorry, that hourly white line. That's where that big drop was from Comex. So it filled all the way back up to Comex, and now it's dropping back down. So Samuel, grabbing some pips, perfect timing, good job. You know, that was like that whole retracement from the Comex drop, and it could still be resistance, and now dropping it back down. Okay, so good wick on US 30, 90 seconds to go. Will it flip? Good fill on NASDAQ as well, but we do have a lot of resistance up here, okay? It tried a prior attempt there at 4 a.m. Eastern and failed. It tried again here when we started the call, 8 a.m. Eastern, and failed. So now it's coming right back up with Wall Street volume, but let's see if it makes a new high or if it will get rejected here, and it needs to get more volume in order to build to break this. NASDAQ can't push through AX. It's difficult. There's a lot of resistance up there, okay? Because also the 200 EMA, that supply zone, that trend line still pushing down. So there's still a lot of sellers up there, but let it continue to build, you know. Let it continue to build. 30 more seconds. Buyers are still there. every time it comes down, they're still filling. Same with US 30, it dropped, but it's filling back up. Okay, so here we go into the close. So get ready, guys. Okay, so here's the close. Good flip on US 30, good move on NASDAQ, okay? So opened ignited, small pullback, could break on US 30 and go back up. Here it comes down. Watch, guys, pay attention to where it grabs a wick. Will it grab it again at that white line? US 30, or sorry, NASDAQ getting rejected as well. Okay, so still bearish, still bearish. And gold is still trying to build in here. Again, I got my stop loss at break even right here, just with the 10% running, okay? If you're not in a trade, I'm not either. If you wait 4 more minutes, a new 15-minute candle is going to form. So if you haven't taken a trade, maybe if you want to wait out 3-4 more minutes, then we'll get a closure on a 15-minute candle. Look at the 15-minute candle. Like it came all the way up, big rejection. Are we going to retain any of this bullish 15-minute volume, or are they going to flip it and it might turn bearish? Okay. NASDAQ still has a very strong 15-minute candle, but US 30 is completely different. Okay, so I haven't taken a trade. I'm still waiting. Maybe 9:45 might be a possible opportunity. Okay, so NASDAQ came back down, pushing, but let's see now with this momentum, can it break for a new high? We haven't broke through here since prior to pre-London, 2 a.m. Okay, so this is it has not broke yet. It hasn't broke for a high. So what I say with this candle, it kind of like, if you want me to buy NASDAQ, prove to me that you can break through here and create a new high. And then if it gets rejected, I might look to buy the pullback. But if it's not creating a new high, it's still technically a lower high. So then sellers could continue to push this thing down. AX, you didn't see the 15-minute look. Look at always. Anytime you're approaching a new 30-minute candle, always just observe the 30-minute candle. When you're coming close to a 15-minute, just quickly go to the 15 and just kind of see the bigger picture, right? Okay, so now NASDAQ is making its move, but is it going to be an equal high, lower high, or higher high? So this is what I need to break, that wick right there, 21,290. Okay, so just even a new high, okay, just to continue the trend going up. Okay, there, that's a new high. Okay, so now with 2 minutes to go, is it going to close above here? Is it going to be a fake out and come back down? This is what we watch for. And then any pullback buys, this area would be a good area to target any pullback buys, right in here. Because this is where that body of volume was. You can see this first pullback held in there. Continue. So if the market comes back down at some point today, it doesn't have to be during this call, but it can be an hour from now. It might be 2 hours from now, right? You can place an alert there if you like and wait patiently for it to come back there. Okay, so we got 1 minute to go. Gold is still trading sideways, but look at each wick, higher low, higher low, higher low, still holding the daily point of interest, still maybe building, still has some momentum to continue to drive. NASDAQ is looking really good, okay? So let's see how the close is. That was the overall trend. Remember the overall trend lines, okay? So I know you can't really see here, but that's where kind of that trend line is. We could be attempting that trend line again. That's where maybe if it gets rejected, then we could maybe possibly buy a pullback off of this zone. If this volume closes positive above here, we'll flip this red zone green, maybe a pullback. We could look for a buy here. If that doesn't hold, the better buy would be down, deep down into here. But the market might not come down right now. It might continue to move up. Again, patience. You might have to wait a while to get that pullback. Okay, so here we go into the close, and more importantly, we're getting a new 15-minute candle opening. Okay, so here's the close. I'm going to assume that NASDAQ is going to close above here, so I'm already going to flip this red to green prior. Yes, it did close. Okay, so let's see maybe any pullbacks into here. Will it hold? Will it come down here, hold, go back up? Will it break this and drop? Okay, so it's coming down to retest it right now. Okay, so it got a wick. Holding. Okay, so can it continue to break? So it's still just kind of hanging around in here. There it goes. Okay. Okay, I'm going to buy this now. And I'm looking to scalp it maybe just into 50% above that daily point of interest. Stop loss, I'm going to keep a tight stop just below that body right there. Okay, so I'm going to utilize this green box to hold right now. My stop loss is just below that 200 EMA. So yes, I understand it could come down and stop me out down there, but I don't want to prevent it from coming and maybe breaking this box below me and then having a substantial drop in the market. So it closed above, it retested. So I'm looking for that continuation push. I know it's on NASDAQ. Normally I'm trading US 30 at this time, but we'll give NASDAQ, it's got some good volume. So even if it just comes up to that yellow line, it's about 20 pips. But I'm looking more so maybe up to there for about 30, okay? And then as it continues to move up, if it does, I will be reducing my risk. Okay, so there's the break even on gold if it comes down there. And then I'll eliminate this to clean up the chart. And then also in here, can we create maybe a bullish flag pattern right here? Good ignited bar on US 30. Okay, so that's, can we break that trend line and get to that daily point of interest, 21,320? It's these stubborn NASDAQ candles. Come on, come on, come on. Get some volume. Let's go. We need buyers to ask to trade up here so we can break this trend and get right up to here. So we got a spin top candle. Buyers are buying, sellers are selling, buyers are buying. Can we continue with this buying pressure and continue maybe breaking these resistance points coming after some liquidity up here? Let's see what we can get. But we got a good higher high. So it's struggling at this trend line. Remember, that was that upper trend line. So if we look at the 15s, because this is that new 15-minute candle, so all I need is just a little 15-minute push just to get up there. Okay, and then this is where a lot of 15-minute resistance is, right at that daily yellow line. Okay. Okay, so there we go. Come on, just push up to that yellow daily line, get that 320. It's not asking for a lot, just 10 more pips. There we go. And then if we can close with this candle above the trend line, we can use the trend line as a supporting support below us. Maybe catch a wick off of it if we can close positive above here. Okay, so let's just continue with this. 30 seconds to go into the close. It would be nice if we can get like that 15-minute push just to break for that 320, that yellow line. Okay, so far we've encountered 0 drawdown. It's not, you know, it's only 15 pips right now, but let's see the close. Going into the close, okay? So there's the close. We closed with right at the high, ignited bar, okay? So that's where we could maybe just pop and break. If we do pull back 50%, like you can get your cut line, and it's the trend line right there, okay? So can we just break that just a little bit? Okay, so it tapped it, didn't break, retest. So it's retesting the trend line, which was resistance, can turn into momentary support now, which was a good retest. Holding still 50%. So can we retain, still hold this, still hold this, still hold this, and just push and break that? If not, then it's going to come back down to entry point, okay? I'm not at a break even yet. I'm waiting to break this yellow line, and then I'll start reducing my risk in the trade. Okay, so you see how it's retesting now the trend line. Is it going to hold? New consolidation flag could be right here, right below that yellow line, and right there. Okay, can we just flag in here a little bit and just pop this area? So all we need is this 15-minute candle just to get that little bit of volume and just break through here. And then 15-minute resistance is right there. Okay, there we go. There's the pop. Okay, so we got it. Okay, I'm going to break even now. Break even. You know, we're protecting capital, number one, right? And that's 25 pips right there. So you can do your thing if you like, you know, but break even is good. Okay. So I have no risk in the trade. My gold got hit at that break even that I had, that 10%. But more focus is on NASDAQ and US 30. Okay. So should be about 25 pips in profit with controlled risk. Okay. There we go. I'm going to take out 80%. There we go. Hit target. 30 plus pips. I'm going to grab 80% here. Again, leave 20% running, just like clockwork. Same routine, different day. Okay? Are we good on that, guys? So we waited for that bar to close above. It retested and broke. We buy, and there we go. Okay? So that's almost 40 pips right now. If it can get to that next yellow line, it's a 50 pip fill. Okay, but we got to rely on our 15-minute candle to continue to push. Okay, and we're going into 10 a.m. in 8 minutes. So I'm happy with that. You know, we took 2 trades today, 2 nice successful trades. We've been doing good lately, guys. So I hope we're compounding our accounts. We're managing our risk properly. We're understanding market moves. We're not getting too greedy in the markets. That's another thing. Greed kills. So you see, I'm not getting greedy. I had right there where I wanted the move to come to. I didn't just guess where I wanted. I utilized my yellow line, and I placed it 50% right in the middle, guys. And you know, you don't always, like, a move is not always going to go up. I believe me, I've held trades probably longer than anybody here on this call, and to my surprise, nothing, lost all of the profits. Okay, so I've learned my lesson. With NASDAQ, I know it moves a little slower than US 30. I know it's a snail, but you can still make some good pips off of it. But did you see what I did there? I waited for the closure. I waited for the retest. I got confirmations. When it broke here, I got in on a buy. I placed my stop loss, really tight stop loss. Like, my stop was just below that body of that candle. So when you look at it, the risk for Wall Street was 25 pips. Not bad. It's kind of just a little bit more than a 1-to-1, but it's a scalp. Remember, it's just a scalp. I'm not looking to hold this for a 1-to-5, a 1-to-10 RR all day. Just to get right up there. When it started to break that yellow line, that's when I took my stop loss, which was there just in case, but unrealized zero drawdown, and then bring it to break even. Now that controls my psychology and my capital. Now I know I have nothing at risk. You know how good it feels when you take a trade and you're in profit and then you know that your capital is safe. I don't know. I feel good as a trader. Some traders don't understand that, but the most important thing of trading, like protecting your king on a chessboard, is protecting your capital, right? And so without my capital, I can't trade anymore. So my capital is the most important thing. It's protected. Now the next thing is to do is just manage your profit, right? Not getting greedy. So when it broke for that 30 pips, the target I wanted, when it came up there, I closed out 80%. I got slipped up as it was moving. And then I got 20% now still live. I did it with gold too, where I closed out, and then my 10% runner got tapped out. But look now, looking back, if I kept my entire trade that went up 100 pips and I didn't take out anything, look at how it retraced right back down and would have hit my break even, and then I would have pissed away 100 pips. Okay, and then same thing with NASDAQ. Maybe it came up there and then came back, and then calculate those pips on a daily basis. That's 130 pips. That is someone's daily goal. Like I've hit my daily goal on this call, and I don't need to continue to trade. Now I'm going to go do my normal routine. I'm going to go out for a walk. It's a rainy day. It's pretty shitty outside. But still, I'm going to go out there, enjoy the weather. I love when it's a sunny day. The sun gives me that energy. It's kind of like recharging the battery. I love the morning sun. There's something about that that is so positive for you. I love it. So that's the beauty of trading, guys. I hope you guys can all get to the point where you're already doing this right now. Trade for a couple hours a day, make a couple trades, hit a daily goal, and go on with your day, guys. So congratulations. I hope you guys did well. Lisa, were you asking about that gold indicator right here, or the daily candle indicator? Is it Lisa? Yes, Lisa. Okay, so where this indicator is, this one, come to your indicators on TradingView, right over here, and look up this one, HTV, higher time frame, HTV, power of 3. It's this one right here. For anybody that just joined the call, if you want this daily candle indicator right here, it's great. It's the first time I've used it. It shows you where it opened, shows you the low, shows you the high, shows you the volume, and it's right beside you. And you can move it on any time frame. So again, guys, if you want it, it's right here. HTV, search for this, power of 3, and add it, and it will look like this. PO3, this one right here. Okay. And if you don't want to use it, you can just hide it. If you want it, it's right there. It's fantastic. It helps a lot. You know, you can see the bigger picture without flipping back and forth, you know, so it's great for intraday trading. Awesome, Lisa. Christoph, you begged some pips. My man, good job. Good job. Okay, guys, so hope everyone had a great call. I got to take off right now. Later on today, guys, I'll be uploading a webinar, pre-recorded webinar with a homework assignment. Today's webinar is what style trader are you? Specifically talking about scalping. So I go over scalping at the beginning. We talk about swing traders. We talk about intraday traders, a little bit of position traders, which are known as investors in the market. And then a few slides are just strictly on scalping. But remember, when I talk about scalping, everything that a scalper does can be utilized as an intraday trader, a swing trader. But as a scalper, you got to be very patient. You got to be very disciplined. You got to be very focused. And as an intraday trader, I can say the same things. A swing trader, just because you're a swing trader doesn't mean you can't be focused, can't be disciplined. Like all of these things, I just kind of talk as a scalper because I'm a scalper, so I can speak about these things, but you can apply it to any style trader you are, okay? So no, there's not a second session later, Samuel. I got a few things to do, but tomorrow again, we're going to come in 7 to 10 tomorrow, guys, and then 1 hour break, Samuel, and then we'll go into a 1 minute education from 11 to 1 tomorrow, okay? So guys, I hope everyone had a great call. Again, this is my break even with that 20%. If it gets hit, 20% is break even, but the 80%, see the bulk of the trade, I'm a happy person. So I did the right thing. by taking out. So I don't trade with woulda, shoulda, couldas, guys. That can haunt you later on down the road. Then you're not going to know what to do. Then you're going to say one day, oh, maybe I should be holding. Then you hold, then it goes to break even. Then the next day you're not, and just too much indecision. So trade with a sound plan. Still, we got a little bit of choppiness. Markets might open up. We'll see later today. But if you did good, walk away, guys. Walk away from the markets. Okay, and if you guys can leave us a like on YouTube, if you guys learned something and you guys had some fun, we do appreciate it. We'd appreciate if you guys can share the channel with trading communities. If you want to invite your friends that want to learn how to trade. Again, we are a very positive community. We help each other out. Everybody here, the entire team helps out. We got some fantastic traders that are better than Dave and I in this group. You know, they can put Dave and I to shame. So we're proud of that. You know, so guys, have a great day today, and we'll see you guys tomorrow. Dennis, do I need a bike? Are we talking about a bicycle, or are we talking about like a like a Suzuki? What are we talking about? If it's a bicycle, yeah, I need a new bicycle. Dennis, message me. Oh, a Ninja. Yeah, message me. Is it a 600? 750? Okay, so the NASDAQ trade break even got taken out, but thankfully I took out 80%. So there, I'm a happy person. Okay. Yeah, Dennis, message me, man. Thank you guys. Everyone, have a great day today, and we'll see you guys tomorrow morning. Have a blessed day. Thank you, guys. It was a great call. You guys are awesome. Good energy today. Thank you, guys, for trading with the 1 minute man. Thank you, guys. We'll see you guys tomorrow.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.